Hey guys, we're going to get started. Good morning everybody and welcome to our final edition of this year's Assurance Roadshow. Welcome to the over 350 people joining us virtually online as well. And this is our last edition. We've traveled around the country. Our product team have traveled around the country for the last 2 weeks, sharing the fantastic news of our biggest assurance release ever, to be honest. For those that have known and loved Probe, MMX came out in 2010 and it's now 12 years later, and without doubt this year is the biggest release. ISA 315, very disruptive to the audit profession. I did my audit articles last century. Always sounds so cool to say that, but certainly one of the biggest pieces of work we as a business have ever done. We've been there with many of you and the assurance profession since the beginning, really, in South Africa, since software was a thing for everyone to get off paper. And we're there again. I think a big shout out to the team. Massive piece of work. Some of them are with us today in our Joburg campus today. We let them away from their laptops for like 1 hour to have a break. It's been a massive piece of work. And I think as a business, we're extremely proud of what we've done and how we've done it. And I'm sure you'll be delighted to see what you see later. Another point, I think, just to make on the Probe side of things is that we will be investing heavily once the team come up for air after getting the product to you to revamp and redo all our training material. So please follow us everywhere on the community and keep an eye out for all our communications. There will be a full video series in detail on every document to use, I think, for seasoned Probe users, that many of you are, as well as any new joiners to your firms in the next 6 months. We hope to have the complete series ready early March for you to use from then on. We're also going to be showing you SQM today, which I think is a very exciting app for us. I think the team again has really designed something really useful for all of you to really embrace quality management into your everyday life. And I think the profession has addressed it more as a regulatory driver and a compliance driver. We're seeing it as really improving quality and effectiveness of audits, helping you do more in your businesses, better audits, more efficiently, high quality, lower risk for you. We're also proud to say it's a global solution. I think we're now up to how many languages? 13 languages globally. We've never done a multilingual product before. Getting great feedback globally about it, which I think is great for the South African environment because we're getting that global input. Global users make things better. You get a real global perspective, practical application of it in different markets. We're getting insight from all the different regulatory approaches to quality globally. And I think as you watch that product over the next year or two mature, it's going to be very exciting for us as a business and for you, our users. So thank you to everybody for taking your time out today. It's a long session. I have no doubt it will be a hugely beneficial session and give you a lot of insight of what lies ahead for you. Remember, always with Caseware, any help you need after what you've seen today, we're there for you in any shape or form. Some of the bigger firms, I see more here in numbers today. Thank you for coming and all showing your badge so we know you're all one pack. Any help you need tailored for your business, whether you're a big firm, small firm, anything, as always, reach out to your account managers. We're here to support and help. I know we're all tired running up to the end of the year and we've got to be ready quickly, and it's busy season from Jan. So really any way we can help, please just always reach out to the account managers, myself directly, or even Christian for you that have relationships with him. And the more you ask us for help or the challenges you might experience, the more we can service the full market that uses our products better. So over to my team, my product team. I think I just want to say a big thank you to them. Hopefully this is the biggest rewrite of a product they do in their careers, but be careful what you wish for, they say in life. So Christian and Joanne, thank you for your incredible work. And you can certainly be very proud of what you've done for the market with your Pro product. So over to you. Thank you, everybody.
Thank you, Judge. So I had a presentation. For anyone who's wondering, you don't need your laptop. If you sometimes I love time to time. There will be a simple practice where you check your email, but if you really try to put attention in it, you really don't need to have your laptop up and open. Okay. So we introduce you and I to help with doing the sheet as an independent consultant. And if you also want to take a picture of our QR code or the link that if you want to connect with us, we'll be sharing information as we go along during the years, as mentioned, as we go through the day. We'll also share some information, and if you want to know more in the future, we will share that with you on that platform as well. So let's look at the agenda. We'll start off with what's new in code. And then we'll go into ISO 315 and the changes that we've implemented. We'll have a quick break, continue with the changes, look at IS doing after implement some of that management, then look at it into some questions. So let's start on how did we get it? When did it was the start and what brings it together? So first of all, ISO 315 was revised in September 2019 and then so that was what caused most of the change that we're going to do. You then have a content team, and the content team then goes through the standards, the changes, and what they need to do within the product. Taking into account our very unique methodology. We then go and present this to our content owner forum. So the content owner forum is 5 content experts in the field, and then also some science. Cindy from work isn't on the content owner forum group actually, so they will put the action in that forum as well. Then from the forum, we then take it into the product team and we go and design solutions that also compliance. We also reached out to the IAAC to go and interact with them, get a proper understanding, make sure that the intention of the standard is reached when we implement it. And then there's also a very nice webinar. And if you guys haven't practiced, I would really recommend it. It's on the site of this from David from the IAAC. There's a very good presentation about the intention of IAAC content. Then we also looked at the different technical reports the last 3 years to have a view of what is changing in more. What is the stuff, how that is. And then what you need to look at and change. So if we then have a look at the inspections reports, we also make sure that we implement those changes within the product. Okay, and then we're looking at the Psycho FAQs. So the Psycho FAQs can be very technical. We're part of those work groups that write some of those articles, but also worth a very good read. So what the Psycho FAQs normally are is if there's a lot of findings and interpretations that we need to clarify, the profession goes to Psycho and say we need to clarify some of these things. There's some confusion in there. And then we go and we clarify and we write, okay, this is the problem. These are the extracts from the standards. This is the implementation and this is the conclusion. So the 2 FAQs that impact us the most for this release is Psycho FAQ 11 and 12. So those 2 FAQs talk about types and, or not types and volumes of transactions, but around sections. What is considered a class of transaction and on what level do you need to do risk assessment? And it becomes much more relevant within ISO 315 and how we're dealing with risk assessment going forward, which you and I will deal with a bit later. So let's look at some of the biggest changes that we've made, and we've called it the Audit Momentous 10. So it's 10 of the biggest changes that I've summarized for you. So we're starting off with sections. So for those guys that's at home and for you that's here in the bag, the ones at home, there's a link in the webinar, but in here there is a cheat sheet. So what we've done is we've provided you with a cheat sheet. Why did we provide you with this cheat sheet? Your document manager is changing. I'll give you a few seconds just to process that. The document manager is changing. So document 2010 is no longer 2010. I'm so sorry for the first years who's just out of your year 1. You just remembered all of those sections. Sorry.
but they now new. You now have 305.10 for property, plant and equipment. Now, why did we do this? We didn't do it just to disrupt you. There is really good reasons around it, and we'll go into that in a bit more detail as we go through the session. Why more sections? We have about 29 sections in the product today. We are upping that to around 79 sections. So much more sections, much bigger document manager, but then much more focused. So when we're working with the product, it's much more focused. When you're doing your risk assessment, you're not doing risk assessment for everything at once. You're doing it for PP&E, not depreciation, profit and loss. So, and we'll go through that during the day. The folders has changed, work programs has changed, lead sheets has changed. The lead sheets is quite an important one. You guys might have struggled in the past reconciling the lead sheets to the financial statements, looking at those graphs, looking at the ratios. How does this all make sense? Now it's grouped much more granular, and those graphs will make much more sense. The ratios will make much more sense because you don't have to take certain amounts out. So if you haven't been using the graphs, you're welcome to go when you're looking at lead sheets, view graphs, and it will show you the relationships and the ratios as well. Very good to now use going forward. Okay, so that is the biggest momentous change. Then we're looking at scalability. So we looked at the new standard. There's no more talk about small versus large. So how can we introduce scalability in the product? And there we introduce a new concept, core versus extended, together with risk assessment, and how we deal with the risk assessment. So we'll look at that in a bit more detail later. The look and feel. When you see the new probe documents, you'll see it looks a bit different, especially in the freeze, the header right at the top, together with the risk dialog. Document 1051, types and volumes of transactions. You can imagine with all the sections changing, this document will change quite significantly. The lead sheets in there, the risk assessment procedures, procedure 1, some of you call it procedure 1, you and I will take you through that in a bit more detail. And then TRAB. What is TRAB? It's not crabs, TRAB. So TRABs are transactions relating to account balance. So what is a transaction relating to account balance? Start with an account balance. Account balance is property, plant and equipment. A transaction relating to that account balance is depreciation, profit and loss, finance cost. Okay. So we've introduced this new concept called TRABs to help you with the efficiency when we're working with all of these new sections. Then a brand new document, document 1055, understanding of IT and its environment. So the new ISO 315 has a lot more focus on the IT environment of your client. It even goes so far to say that you might require an expert to do the risk assessment for the IT environment. And we've incorporated all of that. Then controls. So looking at controls, we saw that controls is a bit all over within the previous probe methodology. So we brought it all into one document, document 1150. We've also changed 1130 a bit. And then we also have something we now call SCOTBs, significant classes of transactions and account balances. So those SCOTBs, it's not a significant risk. You and I will go through it in detail as well, but it is classes of transactions that's significant, and you need to, in terms of the standard, do specific things around it when it comes to understanding the system. We deleted 1131. We didn't just add, we also deleted some of the areas. So where we saw it's no longer required, we deleted. When do we gain an understanding? When do we test controls? And when do we do walkthrough? We introduced all of that. Risk of material misstatement. So not all of you might be 100% familiar with the ladders and how the probe methodology work. But what we have done now is, for the first time ever, you can exclude the financial statement risks from your risk of material misstatement calculation at assertion level. So in the past, if you had a high inherent risk at financial statement level, high fraud risk, high control risk, you automatically had to audit more. Samples was more, your procedures, the types of procedures that you had to do, that was more, because that's what we assumed you would do. What we have done now is we give you the ability to do overall responses, more experienced staff, professional skepticism, unpredictability of procedures. you can do those. And then you can say, I don't want to increase my ROM, which automatically means sample sizes coming down, types of procedures that you do coming down. So great efficiency we could introduce there. And then we've also removed the fraud risk assessment at assertion level, because it is already included in the inherent risk, and you would then just say it's a fraud risk indicator. So the risk indicator is also something new. We saw it in ISO 540. Now we see it again. And when it's a fraud risk, you can just indicate the inherent risk as a fraud risk. Okay. Looking at the assertions, nothing in the standards actually changed for the assertions. But what we have done to give the product more focus and to help you when responding to your risks is we have regrouped the assertions. You used to have 4 groupings. Now you have 6 groupings. And we'll go through that as well. You also only have to look at relevant assertions. So in the past, we tested all material sections, all the assertions. Now you only test relevant assertions and where it's a material balance, a selected assertion. So that's a probe term, but it means that where you select you want to test the assertion, you will test that selected assertion. And I mentioned this already, one of the other biggest, I'm keep on saying biggest efficiency, but together with the ROM, this one is another huge efficiency. You do not have to test all material sections. And all the assertions on all the material sections. So it's going to be interesting once we start opening some of the work programs. I'm not stealing your nice thunder, but you'll see how the new work programs look. And then I mentioned the work program procedures will only show for relevant and selected assertions, and then the transactions relating to account balance. Okay, so let's look at and go into, that was just a summary of what's new. Now we're going into the detail. Okay, so let's look at what is new. And these are the universal items of what's new. So it affects audit, review, and compilation. So these changes that you will see will impact all of that. So in terms of the features, I mentioned the new document manager, renamed, renumbered, and new lead sheets. So let me give you a peek of what the new document manager looks like. So there we can see the new document manager with all of the new documents. If you didn't believe the cheat sheet, now you've got the evidence. New document manager. Okay. So we've also grouped it. We've expanded on the sections, and you'll see the lead sheets now relating to those areas. Hi. Let's think about small and large. So for large, there wasn't a change. For small, it is quite different. So in 1020, where you answer, is this a smaller engagement? You used to be able to say yes or no. In the past, the risk assessment standard talked about smaller engagements and also the probe audit methodology. What we've done there to reduce documentation, we only required you to document what was in the documentation paragraphs. So for large, you document the required paragraphs and documentation paragraphs. For small, you only document the documentation paragraphs. Now, what we have done is we've taken that away, because what we say is for risk assessment, you now have to do a risk assessment. We can't just assume you've got a low level. We can't just have you document less. How it will work is if you have a small audit or a small entity, you'll document less risks, and then the rest will be tailored. When you have a large entity, you'll document more risks, and then the rest will then generate from there. So we've removed the selection of the detailed risk assessment. Remember, if you selected small, yes, we said go to 1050, select the areas you want to do detailed risk assessment for. You select the areas. For all the other areas, we assumed low, which is no. Now we're saying we can't do that anymore, because if we do that, you will do nothing on that section. We can't just assume low. You need to actually go through a process, do risk assessment, select the assertions that would be selected or relevant, and then go through the process of doing the actual procedures. And then we've removed the small requirements in document 11 or the 11 series documents. So that's what we did for small and large. But then we also realized we can't just leave you now with no guidance and no understanding of the standard. So we said, how else can we actually help the users, you guys, understanding what's new in the standard? So for all the partners in the room, I'm sure you've read the ISO 315, quite familiar. You can quote the paragraphs, just like the content team. So for you, you will just use core. You will be happy with core. You know exactly what to do. You don't need the extra guidance. Someone else in your team might need the extra guidance. Remember, it's not based on user, it's based on the team as a whole. So what we've done is we said we start off with the core user, and then we also add application material, the 8 paragraphs, and we also add other explanatory material. And that gives us the extended procedures. So the extended procedures will give a lot more guidance. It has a bit more procedures. It has considerations, and you'll see those when I show you a bit later in the product. So it's not based on your client. It's not based on how big or small or what's going on with them. It is based on you. How familiar, how comfortable are you with the standard? And then what do you want to see in the product? Okay, so that is what extended is. Look and feel. I quickly touched on the look and feel within the document, and within all the probe documents, they will now look a bit different. So very quick and easy for you to see someone is on the old template and they are not complying. We changed the word view to that's actually a support call we received. If you go into view or you're on the phone with the support team and they say to you, click on view, there's 2 views on the screen. You're confused on where to click. Now you know when they say show where to go. And we also introduced the probe help. So let me go into document 1020 and actually show you what the new document looks like. So there you can see the new document. That is document 1020. You can see the header looks a bit different. The back button has changed. We give you the information around the actual document. And then we've moved the information that used to be on the right into the middle. So we start off with telling you what framework you're on. You're on SME, you are on audit, you are on large, and you have chosen to use the extend procedures. So very easy to see what's going on in the file. And then we've introduced, as I said, the show. We've reworded that. There is the new hidden procedures. We'll go into detail when we get to the work programs there. That's only available in the work programs. For roles, I added the option for you to go and look at the role options and change that. Setup, nothing much has changed. History. So what we've done is the milestone functionality has been available in Caseware for quite some time, but you can now actually save a milestone from within the document. So as you're working through, and let's say you come to the end, you want to send the document for review, you can send it and then save the milestone. When that is then reviewed, you can see all the changes from then until now. Or after the review, you send it for review notes, you can save a milestone and then see the changes. So you don't have to read through the whole thing again, just compare the changes. And then you have the document history. Refresh. So refresh is, it always used to be there, but I'm going to stand still a little bit on the refresh button because I don't think everyone always knows what the refresh is for. So the refresh button, or let me go back. The probe documents, there's 2 types of probe documents. There's pure form documents, and pure form documents means there's no information actually saved within the document. All the information is saved in the database itself. Why did we do it like that? So that multiple people can work on the document at the same time. So nothing's saved in the document. As you're working, we update the database in the background. So multiple people can work on these documents at the same time, which then creates efficiency. So when we get to document 1051, not one person can do 1051 at a time, multiple people can. You can all work in SmartSync, you can all have the file synced, but what then needs to happen is for you to see other people's information, you actually need to go and refresh. So when there's risks, when people raise risk, you refresh the risk table. When they insert rows, you go refresh client rows. Or if you don't want to go refresh, just close and open the document. It will refresh as well. But that's for when you're working within the document and you don't actually want to close it. You just want to refresh it. Okay, so most of the planning documents are now pure form documents, which means you don't have to click on save. If you click on save, we will actually sync the document and you might get a conflict. But if you're just working in the document, you don't have to sync. We will sync the information for you as and when you make the changes. Work programs, on the other hand, is not pure form documents. They are work programs. All the information in those documents are saved in the document itself. So there, the information, one person can work on the document at a time, which is what we expect within the field. One person will do a section, and then you need to manage what's going on within the work program yourself on and when you actually save the document. You also don't really have to click on save. We will save the document when you close it, but if you do want the information to sync, you will then click on save. And then I introduced a go to button. So for the go to button, you can quickly go to your calculator, adjusting entries if you quickly want to do an adjusting entry. And then there's the issues as well if you want to jump to issues and see what issues has been raised. Clicking on Probe Help now. So Probe Help, we have the Getting Started series, the guide on engagement evaluation, as well as the Watch Engagement Evaluation video. So the one is a Word or a PDF document guiding you through how to complete the document, the objective, the instructions, and then the information in the document. And the other one is the video on that. Now, that's what Jody mentioned. These documents will be taken offline when we release because it's no longer relevant, but we will be introducing new ones during the course of next year to help you with understanding how to complete the documents, and we'll be upping the training there. Then we have our frequently asked questions. So if you have questions, check there. All the FAQs we already add to the community. And I also introduced a chat with support. So something goes wrong, we hope not, you can chat with support there. You don't have to wait in the queue. There's an update from Hotfix as well, together with an update from Library. So update from Hotfix is during the year when we become aware of something. We're not releasing full templates every time. There's a small change we need to make. We'll release a hotfix. We'll upload the hotfix and give you the detail on the community. You can go download that hotfix, install it, and then fix your engagement files with that hotfix. And then the engagement file information is just a nice way to see what's going on in the engagement file. And the license information is, what do I have licensed? Okay, so that is the new look and feel of Probe. And you can see, you will very easily see what's going on, first of all, within the new freeze, and then if someone is on the old or the new version. Then what we've also changed in terms of the look and feel is the recording dialog. So the risk record dialog, the consider items. The consider items used to be in blue, and then the instructions. So we still have instructions that will stay in blue. That's where we inform you to go and do something. The consider items, they used to be linked to small and large. We've now changed that. That is now linked to to core and extended. So when you select extended, you will have the consider items, and it will now always print. So let's have a look what it actually looks like again within Probe. So there's consider items. They are now in green, and you can see the consider items will give you more guidance on that specific procedure. We also have the instructions. So those are the ones in blue still, and that just gives you an instruction or more information, but it's not around how to, or the extended guidance that we're talking about. And then jumping to document 1160, if I just go to property, plant and equipment and click on raising a risk, you can see in the past the risk was horizontal. Now the risks are vertical. So you can see a full risk on one screen. You don't have to go next, submit. You have everything on one screen. If you edit something, you edit it on one go, and you can then save. So I raise the risk for property, plant and equipment. Property, plant and equipment already selected. I'll close these sections, and then you can see what the rest of the items looks like. So you can also now see, you can very quickly link a risk to multiple sections. And there is our fraud risk factors I spoke about when we're recording an inherent risk. The assertions, so there's your glimpse on the new assertions and the information that is then required. You then submit, or if you don't want to save the risk, I will go and delete the risk. It's going to ask me just to confirm, and I will do that. Okay, so that's the risk record dialog, the controls, the considerations, and the instructions. Now, if you have not yet made a note, now's the time to get the book out and make a note. So do not copy old versions of Probe into the new version. Okay. the new versions and the old versions of the documents are not compatible. The whole back end has changed. So I'll say this again. You can't copy old versions into the new document manager, and also vice versa. Okay. So if you have an old file, you can't say, oh, we love what Probe has done with the new property, plant, and equipment stuff, but we don't want to update anything else. Let's just copy it back. You will see nothing. It will be broken. And please don't find support. Okay. So, and even if you're reviewing it and you see, there's an old header in my document, there's an old version in my document manager, don't even review it. Don't waste your time. As a partner, you've got better things to do, send it back. It's going to be a waste of your time. I can promise you those documents will not be working. You won't see the right procedures. You won't see the right results. Okay. So for existing engagements, we always say, do not update engagements in progress. And I'll say it again, do not update engagements in progress. Because what's going to happen this year is when you get to finalization and you say, oh, I actually want to update the file. I would love this new header Christian and the team has done. I want to see the new header. But what else is going to happen? You will lose everything else. All the work that you've done, you will lose it. You will do the audit from scratch. So don't update. Only update if you're starting with a brand new engagement that has to be on ISO 315. Importing of data. You might say, okay, I'll update, but I know you've got this feature somewhere to import information and import data from prior year files. We're not going to allow you. You can't import from prior year files. Because if you import the information from prior year files, it won't be relevant. Like, where does the PPE risk now go? Or where does the going concern risk go? There's now multiple sections. So when you try to import from an old file, it's going to stop you and say, you actually can't import from an old file. What you can do still is, if you're on the same version, if you're doing a group audit, you are on the same version, you can actually go and do the planning ones and import it into the others on the same new version. Okay. Then firm templates. Thinking about firm templates, if you have a firm template, you have custom work programs. If it's linked with Connector, definitely you have to go and relink them with Connector to the new groups. You'll also have to think about how do you split those work programs, working papers for the new sections, similar to what we have done, and then link them accordingly. Now, I'll just stand still for a moment here to say we did not change the mapping. So you don't have to worry about having to go and remap. Mapping stayed the same. There was a few improvements in the mapping, but that stayed the same. It's just how we're grouping those mapping items together. So don't worry if you have them mapped before, you can still use the mapping from before. We didn't change that. All the templates and all the changes that you're seeing now, all of this is based on Caseware Working Papers 2022. So you also, if you want to use the new functionality, have to use Working Papers 2022. And then interim audits, because I'm sure that is the question on everyone's mind. Now you say, I can't update, I can't import, I can't use the old stuff, I can't copy and paste. What do I do with an interim file? So what do we suggest you do with an interim file? So you most likely started with a prior year file already. And if you haven't, then that is what you will do. You will then do a roll forward from the prior year file. Then document, well, maybe I should say first read ISO 315, then document only the required risks and only do the required risk assessment procedures. You'll see later during the day why it's important. Review those risk assessment procedures and go into the work programs and remove the procedures with assertions that is not relevant and not selected. So this is a manual step. And I know some article clerks are not allowed to actually ignore procedures. This year, I'm giving you the permission to go and ignore them. And your partner will be grateful for that, because what they are going to realize is when you get to the end and you get to final, you would have done all this interim work for free, because those assertions are no longer relevant or selected. And there's no risks there. So we need to do nothing there. Okay, so that is your interim file. Then when we get to next year, and we're now doing the final file, is you'll again do a roll forward from the prior year file. This time you'll update. But again, you'll lose most of the information. So if you don't use the financial statements, you might as well just create a new file. But if you're using the financial statements, you want that to update, then run the update. And then you'll get all the new components in. Then you will go and complete the planning on the new template, taking into account the information from the interim audit, complete the risk assessment, and then reference to the current year interim file. Don't now go and say, okay, we'll go and copy and paste all the information from the interim file over. You will then see the wrong things. I just said don't copy from old files into new files, because then the procedures won't show that you're expecting to show. Okay, so rather keep the old file there, reference to that old file, and make use of the reference functionality rather than bringing the information. Okay, so that is an interim file. Okay, so we're now going into actual ISA 315. So that was the big overall changes. So ISA 315. Already mentioned in September 2019, the IAASB approved the new 315, which deals about risk assessment. It is effective for periods beginning on or after 15 December 2021. Now, before you think we're late, we're not late yet, except if you have a period which is less than a full year. But for most of the audits where the periods are a full year, it's only applicable 15 December 2022. So any audit after 15 December 2022, with a year end of that is where you need to use the new standard. It is for reaching the changes. You'll see that if you haven't yet thought about changing your methodology, you should think about changing the methodology. We will also be releasing an updated version of our methodology document together with new mapping documents on how we link with the new standard. So if you're using the probe methodology as is, you're in luck. We will give you the methodology document and the mapping documents. If you're making changes, remember, you need to go and make those changes on your firm methodology as well. Why did they change it? One of the biggest reasons the IAASB say they changed the standard was to drive better quality and a more consistent risk approach during or with the different firms. So that is the biggest reason. And then they also want to promote professional skepticism and focus our attention to really the areas that have risk. Not just have a blanket approach if you need to do everything, every assertion, and audit to death and sample everything, but really do a risk assessment and focus on that risk assessment. Okay. So when we're looking at the biggest changes that impacts probe, there is really three areas that has the biggest changes for us. So the first one is obtaining an understanding. So we required you to do an understanding of some of the areas before when you said controls was relevant. Now the new standard says for every SCOT to be, you need to do an understanding of the information system. Then identifying and assessing risk of material misstatement, the inherent risk factors. So that is something new. We saw a bit of it in ISA 540, but now there's factors in ISA 315 as well. The spectrum of inherent risk based on likelihood and magnitude. So they tell us there we need to assess inherent risk based on a spectrum, and it is based on likelihood and magnitude. And then they have a stand back provision to say that after you've done all your risks, you've done all the risk assessments, we get to 1220 and we put it into 1220. You then stand back and you say, did I record all the risks? And then you start with the field work. If you don't do that stand back and there is still some risks, that is a concern for them. And then how do we respond to the assessed risks? So we need to do substantive procedures for all and each material clause of transaction, account balance, and disclosure. So if it's material, you need to do some work on it. But you do not have to do all the assertions. And the IAASB is very clear about that. You only have to do selected or relevant assertions. So that is a big change that we've introduced in document 1220, which UNA will show you. Okay, so with that, I'm going to hand over to UNA to take you then through the details of what Probe has done, how we have actually incorporated all of these changes in Probe. Thanks, Shona.
Good morning, everybody. It's lovely to see you all. We've been working our way up to Joburg, and here we are. Guys, do I need this mic or is the other one? Okay, thank goodness. I'm going to just keep it here. All right. So welcome and thank you for taking the time out. Although I think being a Friday morning, everybody is just glad to have a bit of a relaxing morning. Just before the weekend starts. So I'm from Cape Town, and there they say nobody works on a Friday, but I can bet you some of us do work on a Friday. Yeah, so even if we have to come to Joburg to come and do it, but yeah. All right. Before we start with Probe, I thought, unlike Christian, who thinks every partner has read the standard from start to finish, I know that not every partner has read the standard, and I also know that not every person that's going to be using the product has necessarily familiarize themselves with the whole standard. If that is you, please make a plan to go and find out what does ISO 315 require. Whether you complete a course, whether you read the standard, whether you watch a webinar or something, do something, but you've got to understand the key elements included in the standard. Okay, it's a lot of work or a lot of information in that standard, I know, but it is important that you understand the critical elements to that as well. All right, but assuming then, apologies, assuming then that not everybody is up to this point necessarily upskilled, or maybe you have already done that course in, I don't know, April maybe, and you can't necessarily remember everything anymore, I'm going to quickly run through a few concepts from the standard itself so that when I use those terms, you are familiar with them. All right. So first of all, ISO 315 revised 2019 asks that the auditor must separately identify risk and assess that risk for any risk relating to the entity's financial reporting framework. Right. It's not that we've never considered it, not at all. Before, it was one of the elements of inherent risk assessment at financial statement level. So it was part of your nature or any of one of those little headings. Now it's got its own separate heading. Right. So don't brush over it. Don't just, they do IFRS, so what? You've got to actually go and consider if there are risks related to that. Christian's already mentioned the inherent risk factors, and we are probably already familiar with that from the auditing of accounting estimates. Interesting enough, they wrote the auditing of accounting estimates standard more or less at the same time when they were busy with 315. But while 315 was taking a bit longer, they already knew things like the inherent risk factors was going to come in, so they already included it in 540. So it's not like this is actually like, copying what was in 540. 540 had actually copied what was in 315. So the inherent risk factors, therefore, then, are things that we need to consider when we are asking ourselves, is there a risk of material misstatement in this account, in this class of transactions? And how we help ourselves to identify risks is by considering these inherent risk factors, complexity, subjectivity, fraud, as we mentioned, a few of those items. All right, so those have not been required before. We are now required to consider them. Then relevant assertions. This is a defined term. A relevant assertion is an assertion where an account has a risk recorded for that assertion. So if we take revenue and we've recorded a risk for cutoff for revenue, then cutoff of revenue is a relevant assertion. All right. So that's the defined term. If we talk about relevant assertion, you have recorded a risk for that assertion. Next then is this SCOTB or significant class of transactions, account balance or disclosure. Now significance normally, if I think significant, I immediately think significant risk. Okay, that's not this definition. Significant risk merely means there is a relevant assertion for that account, balance, class of transaction or disclosure. So in plain English, if I've got a significant class of transaction, account balance or disclosure, it means I've recorded a risk for one or at least one assertion for that class of transaction, account balance or disclosure. So I'll get back to the example of cutoff of revenue. If I've got a risk for cutoff of revenue, I have revenue as a significant class of transaction in this case. Okay, if it was PPE, it would obviously have been an account balance. And then the definition of a significant risk. So before, the standard always said for a significant risk, you need a special response. You need to consider if there are controls mitigating the risk. Although you have, what did you have to do for a significant risk? But there was nothing in the standard helping us to identify When is something a significant risk? Okay, so now the definition, and you need to decide for yourself if this actually helps you more. But now the definition says that a significant risk is a risk where in our assessment of the risk is on the upper end of the spectrum of inherent risk. See if that helps you. I don't know. All right, let's just consider, remember when we're assessing inherent risk, we are considering the magnitude and the possibility, the chance that the mistake can actually happen. So the likelihood, the possibility of a risk going wrong or of something going wrong in this account, and the magnitude, the impact, most of the times it's a monetary impact, but you know, what's the impact on the financial statements? So if we then consider the possibility of this risk actually happening, and then the impact, the monetary impact, the magnitude of this mistake, if they are both then indicating that, well, if we think of a graph, if they are in the higher end or the upper end of the spectrum, that's a significant risk. And now I need to go and do my significant risk responses, control. Okay. But what I want to warn you also is that in the implementation guide, they are very clear that it's not just high likelihood, high impact. It could also be massive high likelihood, well, biggish impact, smaller maybe even, but they're very, very high. Or it could also be not so likely, but oh my word, if it does happen, it's a catastrophe. That could also be a significant risk. Right, so that's the definition there of a significant risk. Just want to grab a glass of water. Then we've got the standback requirement. Now the standback requirement operates at two levels. First of all, for those material balances. Now material balance, thank goodness, is a material balance, all right? So it is material qualitatively or perhaps even quantitatively. So if I've got a material balance and I have gone through my inherent risk factors and I have not identified a risk, then I've got to stand back and ask myself, sure, I haven't recorded a risk for revenue. Is there really no risk for revenue? Really? Okay, that's your stand back. But secondly also, before you, in my mind, I'm almost looking at this saying, I've done everything, understanding my entity, I've done my risk assessment, I'm going to go into field work now. Have I really, really spent enough, I want to say brain power and energy, okay, because it's not determined by time. Have I really spent brain power and energy, really considered where risks could be so that I don't miss out on addressing any risk when I go and do my field work? That's the standback. Have I covered all the risks? Okay, because the reality is, if I don't have a risk, I'm not going to test it. Okay, if I open up a work program in a blank file, there's no work procedures. It's blank. It's kind of scary the first time you see it. There's nothing. So I really have to be sure that when I say these are my risks, I'm going to now go into the field work. I've identified all the risks. I want to interrupt myself. If you are one of those teams or have ever been in this unfortunate position where the field work happens before the planning's done, you're going to have a problem. Your field work is going to be empty. I like this part. He's like, every now and again. I'm putting you on the spot. Sometimes it's not just the trainees. Sometimes it's different circumstances. I know we always try and say we've got to get the planning done before we go out and do the field work, and then things happen. Okay, that's true. But please, you have to understand, with this methodology, it is risk-based. It is driven by the risks. If you do not have risks, you will not have procedures in your work programs. Okay. Right. Good. Next thing, IT-related definitions. And then also considerations. So a lot of the definitions in terms of what we need to consider for our client, that's the first one, it's for the client, has been updated, expanded on. We used to have, I think, one appendix of IT things. We've now got two appendices on IT things to consider. The one is general IT controls, a whole appendix to ask yourself, what controls does the client have on their IT systems to ensure that the other controls are actually also operating, okay? And then another one just in terms of, well, everything IT, information system and so forth. Two whole appendices. So I know I had a lecturer at Bossy who said to us, and it's like, put me off tremendously on 315 back in the day. She said, if you can't fall asleep at night, go read ISA 315. Okay, so obviously I never read ISA 315 back then until I had to start teaching people how to audit. And I was like, this is the most awesome standard in the whole book. Okay, really, 315 makes you understand how to audit. So if you're still not convinced, you have to go and understand that standard. If you're still not convinced, you have to go and read that standard. Please, Appendix 5 and 6 is like non-negotiable. You have to know what's in there. Otherwise, you are not going to be able to really assess the client's IT environment. Okay. So that's firstly, from a client's perspective, there's additional definitions, additional guidance for us to consider the client's IT environment. Then for us, are we using IT elements? Are we using data analytics? Are we using AI? Are we using any of those things? And if so, what do I need to consider before I just jump into it and just start using it and putting it on my file and then maybe I can't even rely on it? So there's some considerations that the auditor has to go through before or as part of using what is termed automated tools and techniques. Okay, what's automated tools and techniques? Well, it's basically any IT elements that you are using to get information, to understand the client, to do your risk assessment, and also to perform procedures in your audit. Why this term? Why not just data analytics or this or that? Well, quite simply because the standards tend to be changed slower than what we might have wanted to. So they realized that if they started using a term like data analytics 3 years ago, by the time we now have the standard, we've got all these other fancy things already being implemented. So then they'd have to update the standard again. So they came up with this term, automated tools and techniques, and you'll often, if you just Google it, there's a lot of guidance and stuff about it. But that's whenever they talk about automated tools and techniques, they include anything that could be automated tools and techniques. And you just need to apply the principles equally in considering how you can use this, whether you can rely on your results, etc. All right, so those are a few new concepts, new terms, and as we go through the product, you'll also see where sometimes some of those things need to be considered, where they are dealt with in the product. Right, so then, what are we going to look at today in terms of documents, things where 315 has affected our file, or our template at least? So first of all, we're going to look at the assertions. Christian's mentioned the standard hasn't changed the assertions, but for the sake of our focused risk assessment, the groupings of these assertions have changed. The good news is I want to just highlight that desired audit risk has changed. So desired audit risk has not changed, okay? But I want to make it very clear how we determine desired audit risk and what we use desired audit risk for stays exactly the same. Okay. Then we are going to look at gathering information, types and volumes of transactions, all those 10 documents, 1055 being our new document, understanding of the IT environment, and then move into the 11 documents. Not that the others aren't risk assessment. As you'll know, you can already record risks from there, but then start looking at really going and assessing the risks. First at financial statement level, inheritance, fraud, control, and then go to the assertion level risks. 1150 first for the internal control part, and then 1160 the risk assessment at the assertion level. Once I've done all of that work, and really there's going to be a lot of work up to that point. If you think about your budgets and about your planning of your audit projects, because really those are projects that we need to manage, you are going to have to move some of your time and effort from the field work towards the planning side, towards the risk assessment side, because a lot of the work is going to move to the start so that you know what are those risks and therefore can save on field work later on. Okay. So once we get to that point, now we know what our risks are. Now we get to the audit plan and strategy, and we can then decide, right, so how am I going to address these risks? What is it that I need to do to go and test if there is a misstatement in the financials or not? And then we're going to look at the work programs and, of course, address those TRAVs, the transactions related to account balances, and have a quick look at finalization at the end. Thankfully, 315 is about understanding the client and risk assessment, so you would probably not expect a lot of changes in finalization. Good. Let's jump straight into those assertions. So the assertions, I think there's about 13 or so of them. We've regrouped them into 6 groups. So completeness is still completeness, and completeness is just completeness. Okay? Existence and occurrence is still there. Rights and obligations, Definition has changed slightly, but we still have rights and obligations, and that's obviously account balance only, not class of transactions. Accuracy, valuation, and allocation as a group. The definition has slightly changed because things like the cutoff and the presentation has been, disclosure has been moved out of there. So presentation, as part of the definitions of the ISO 315, if you go and have a look at the definitions of completeness, existence, occurrence, each and every one of those assertions rather, the definition in there will say all the transactions that happened in the year are recorded and presented. So the presentation part is actually part of each of those assertions in the standard. But can you imagine if you are concerned that perhaps property, plant and equipment isn't appropriately presented in the financials, and we're saying we're doing risk-based assertion, or risk-based audits, we only have to go and do work for those risks that we have identified for those assertions. Now I'm going to have to go and select all the assertions and go and do a lot of work. But now we've split out the presentation part to say, well, that's a separate assertion class, presentation and disclosure. If I then have that concern about presentation for PPE, I will go and raise the risk for PD or presentation disclosure, and I'll focus my field work, my response, my further audit procedures on presentation and disclosure. Okay. So those two, especially cutoff also, I'm very, very excited about cutoff being separate, and presentation and disclosure is going to help you to basically document your risk assessment more focused, and of course then the responses will follow from there. All right. And then I want us to just quickly have a look at the desired audit risk, or then at least, right. So if we just start in 1020, you've seen a lot of the stuff already in there. What I just want to show you is in the conclusion part where we are going to work with our desired audit risk. Still, the last two questions in that document, your assessment of going concern risk at the planning stage, and your assessment whether external users of the financial statements whether they do increase your risk as an auditor, if they're going to rely on your audit opinion. Those two responses will then drive your desired audit risk. Okay, so nothing's changed in that regard. If we then go back to the slides and we start having a look at 1050. Right, 1050 is our gathering information document. We have removed the overall audit considerations. What does that mean? Well, you might remember in 1050, we used to have questions like, are you going to rely on a management expert? Right? You switched it on there. I used to always say it's like a light switch. You switched it on in 1050, and then in 1051, you were asked, okay, for which account are you going to do it? And then we had to go tick, okay, for inventory, or tick for this one, or tick for that. Well, now we're actually saying, well, can we actually determine that? We don't even know what risks we have yet. So we've moved that out to audit plan and strategy 1220. We'll see it there later on. But there is where we're going to say, well, knowing what risks we have, are we going to rely on a management expert? Well, now, I just want to say we don't really care. Not that we don't care, but it's not a relevant consideration at this stage. All right. A few other things have also moved out there, and we'll see there's a very nice little summary where we can find them there. Then, as we spoke earlier already, because we don't have that consideration for small risk assessment anymore, that whole section has also been moved out. And maybe just also, if you wanted everything to be low, then remember, if you have a low for each of the assertions, you're going to have procedures in your work program for every one of those lows. And we're saying we only have to do work where there are risks. So why have a low if you can have a nothing? Okay. Good. And then what have we added? Couldn't just remove. Good. First of all, walkthroughs. So we've added a question about walkthroughs, and I'll talk about the little screenshot at the bottom, but let's just first consider what the standard requires. So the standard requires a system description for every significant class of transaction, account balance, and disclosure. Now, what's that again? A significant class of transaction, account balance, disclosure is one where we have a relevant assertion. What does that mean? It's one where there's a risk recorded. So practically, I am expecting more system descriptions in your file, because traditionally you probably had a system description for revenue, purchases, cost of sales, something there, maybe for payroll, any others, maybe here and there, maybe payments for bank, okay? But I doubt you had a system description for PPE. Now, if you are recording a risk for PPE, you have a relevant assertion, which means PPE is a significant loss of transaction, account balance, or disclosure, which means you need a system description. Right. I'm not saying testing controls. I'm saying you need a system description to explain how the information flows to ultimately land up, well, in the GL and ultimately in the financials. Okay. So that is something where I'm definitely expecting a little bit more effort in your file. Then you have to evaluate the design and the implementation of controls in 3, you could possibly consider 4 instances. So system description, how does the information flow? I don't need to worry about controls. I just ask what documents, so that it's recorded. Then I need to go and identify controls and evaluate the design and the implementation thereof when I've got a significant risk. What is the significant risk again? It's that upper end of the spectrum of inherent risk. Okay, that's not changed actually. We've always had to do that. Get an understanding of the controls implemented to mitigate that significant risk. And when I get that understanding, I need to test the design. What is test design? Design is check, ask yourself, consider if that control, if it was implemented and operating effectively, would actually prevent a material misstatement or detect a material misstatement and therefore correct it as well. Okay, so sometimes you need 2, sometimes you have 1 that will detect and correct. But that's design. Will it actually fix the problem? That's the first instance where I need to identify controls and evaluate. Secondly, well, if I say I want to test controls, you need to first identify those controls. Hey? So then the system description itself is not going to be good enough. So if I want to test controls, maybe that is the best way that I believe that's going to be most efficient for us in testing this account, is to also include control testing. Or then also some clients have told me, some audit firms have told me, well, my client likes it when I test their controls. Well, then you can go test your client's controls. I hope they also like paying your invoice for testing those controls. Okay. So that's the second one. And then lastly is really if you feel it's necessary to go and identify controls and evaluate the design and implementation. Now this is almost like the chicken and egg situation. Do we first identify the controls and evaluate them and then record risks of material misstatement? Or do we, as part of a whole understanding of how everything happens, or do I first identify risks and then say, right, now I need a system description and now it's a significant risk, now I need to also consider controls. Okay, so there's a little bit of a jumping back and forth. Okay, but back to walkthroughs. The standard also says that when you have to get that understanding of the system, so not necessarily controls yet, just the system description for PPE. When I have to get that system description, I need to check that my understanding of that system description is correct, appropriate. So not just did I ask someone or I sent them a list to explain it to me or to fill in a form or, you know, used last year's form or last year's working paper to see what's the system description. Now, I actually need to confirm my understanding of the system description. Okay? And the standard has this long thing where they talk about the process to initiate, record, process, and correct transactions and transfer to the general ledger. That's a system description, the long words. Okay? I need to know that the system description is the correct system description. And one of the ways in which we can know that the system description is correct is by performing a walkthrough of the system description. Now, I know that very often we consider a walkthrough with controls, but you can actually do a walkthrough of just the information flow, not necessarily the controls. The standard says you can choose to do a walkthrough to confirm your understanding of the system. Only we at 1050. What is included in 1050? Because the standard gives you the option to do a walkthrough to confirm your system description understanding. The firm has an option of whether they want to always do this, okay? Whether they want to never do this, or whether they want to perhaps do it in some of the files. So make your pick, choose, decide per audit. So that option is included in the firm settings, and that's what's in our slide in the bottom part, that screenshot. In the firm settings, when the Caseware champion sets up the firm template, you can then decide, are we going to always require the teams to do a walkthrough for their system descriptions? So always do a walkthrough to confirm your understanding of the system description. Are we going to say, no, that we don't need that, we don't want that? No, never. Okay? Or are we going to say, well, I think every audit needs to decide for themselves what's best. So let's switch on the option in the template, and then in each file, the guys are going to say yes or no, what do we want to do? So in 1050, if we say never, You never have to do a walkthrough to confirm your understanding of the system description. Nothing will happen in 1050. If we say you always have to do a walkthrough to confirm your understanding of the system description, nothing will happen in 1050. But where we give the teams the option to say, do you want to do it in this audit? Yes or no? That question is going to appear in 1050. Right, we'll look at that just now. But I want to reiterate, we only right now, basically almost again like this light switch, switching on saying, are we going to prompt you for a walkthrough later on when you do your system descriptions? All right. Right, so let's go and have a look then at what does 1050 look like. So the first thing that is absolutely wonderful to me is that on every single one of these documents, we are going to be able to and have to document which of the risk assessment procedures that we perform in order to complete this document. Now, the risk assessment procedures are three things, three options. You can do all or you can only do some. Inquiries, observations, and inspections. So in this case, I've already completed bits and pieces, but in other documents, you will see in some cases, maybe only the one is ticked, maybe two is ticked. Okay? But you're going to have to, in every single one of these documents, when you start completing, say, what did I do to get the information in order to complete this document? Right. So in this case, then, risk assessment procedures completed in order for us to document gathering information. I just ticked all three of them. And remember also from the current template, whenever you had a discussion with someone at the client, you had to say, who is it? When did you have the discussion? Well, that is still prompted there just at the top of the document. All right. Then we get into the questions. So some questions about prior figures and whatnot. And then we've got this question about automated tools and techniques. Remember we said automated tools and techniques, we're going to have to consider that. There's already a question there for us to say, are we going to use automated tools and techniques in order to obtain an understanding of the client? There's some questions there. And if we say yes, well then obviously we're going to have to document about those automated tools and techniques. And then question 5 here on the specific file is then that question for the walkthroughs. So in our file, the firm setting said ask per audit. So here in my audit, I now have to go and say, do we want to actually do walkthroughs in this audit? And ask, because I obviously want to show you where that comes in the document later on. Well, not in this document, in the controls document. All right. So there's a number of questions here. Remember those questions about management's expert and are we going to use an auditor's expert? Are we going to attend the stock take, the cash count, all those things? They're all moved out to audit plan and strategy. All right. Transactions, everything here. There's a lot of questions. You'll have your considers and things as they go, or some of the guidance, and that's that. But the most important ones is that we remember what that walkthrough part is about, and that our audit responses or our plan strategy, that will come in later on. Good. Then, types and volumes of transactions. Now, in my mind, maybe not 100% right, but in my mind, I always thought like 1050 is almost like an overall, and 1051 is where I get into the detail of the separate accounts. And still, 1051 is where we get into the detail of the accounts. But we are still doing our understanding and our risk assessment. Right. So before we start looking at 1051, it's important for us to first see what is a section in probe. Right. What is a section in probe? Have you ever thought about that? No, you just opened it up. Eh? Section 20, PPE, we all know that. 32, and so forth and so forth. Okay, you've got your cheat sheet to now go and see what are those new ones. We had a firm in the Eastern Cape who said they want to print that cheat sheet out big and then put it in the trainee section. So, yeah, if your trainees are in the office that often, I guess that could be beneficial. But I imagine most trainees are out at client, so that screen is going to just be there for itself. But definitely a little something somewhere for you to find your way is definitely necessary. Right, so what is a section? We know we've got sections. We know the sections change. What is a section? So traditionally, we had sections as I guess they made sense. We had PPE, the balance, and that hasn't changed, because the person auditing PPE is probably the best person in the team to also audit depreciation, they were grouped together as a section. Okay? Thankfully, you're still going to have that same person and they'll be prompted and whatnot. But does it make sense that it's part of a section? Depreciation, profit and loss, and things like that. Now, when we then got to those SICA FAQs, and the question arose as to at what level do we assess risk of material misstatement. SICA then wrote these 2 FAQs to help us to consider what is actually the requirement in the standard. Right, so what did those FAQs say? And Christian's already said they're quite technical, but really I want to encourage you to go and read them. Not, I think there's 15 now. Don't read from start to finish all in one day. You will fall asleep. But take one FAQ and really read it. Read it twice if you have to, 3 times if you have to. It starts at the top, what's the issue? Okay, and there it really says, what is it that an auditor is struggling with? Where do we see that us are really struggling to apply the requirements of the standard? And then it goes into, well, what are the requirements of the standard? And that's where sometimes I really get a little bit lost. I have to read again and again. And then at the end, really say, okay, so what's the answer? How do we do this? What is the right way? And so there, in those FAQs 11 and 12, there the answer came out and it said, we have to assess risk of material misstatement at the level or at the level at which items are disclosed in the financials. Okay, so in plain English, every line item in your balance sheet, every line item in your income statement, that's the level at which you need to do risk assessment. So how did Probe address that up to now? In Probe up to now, when you did your risk assessment for PPE, you had the option to assess at a more detailed level. So you didn't have to just do risk assessment, I want to call it at the lead schedule of level, which included your depreciation and all those things. You could actually do risk assessment for your PPE carrying value. You could do it for the depreciation, you could do it for the impairment or the profit and loss, and so forth. Okay. If we got intangibles, you could do it separately for all of them. Group loans, you could do your risk assessment for each of those group loans because they are all disclosed separately in the balance sheet. Okay. Obviously, if you didn't want to, or if the risk was similar, you could still do it at one level. That was fine, as long as you were sure that you weren't missing out on any specific risks. So then when we now started looking at the risk assessment from 315 revised, and of course the impact on our work programs, we realized that it would be better to rather group the sections according to the level at which we must do the risk assessment. Why? Because if I identified a risk in group loans and I recorded a risk for completeness, for argument's sake, whatever assertion you want to choose, I would have had procedures for the whole section. Now I need to do those procedures for completeness for all the accounts. It's not necessary. Whereas if I had those group loans in separate sections, I'll do the risk assessment for each of them. When there is a risk for specific balance, I'll do the procedures for that specific balance. Right, so what's the impact here? You might find that other than the fact that you're going to have to study that section cheat sheet or keep it with you, or I don't know if you want to have it as your background to your laptop or something like that. Apart from that, you might also be surprised as to where things usually or previously were identified in the document as material and won't be material anymore. And they're probably one of the easiest examples is that group loan section. Okay, there were a lot of loans and they quite easily became material. But if you split them out, then less of them might actually individually become material. Okay, so I'm just warning you, don't be surprised. It's not a bug. That's the way it is, because we are now assessing each financial statement line item separately in separate sections and responding to them separately on the work programs. Okay. With that said, then let's go and see what changed in 1051. We now know we've got more sections. What's happening in each of those sections? So first of all, this is where some of the audit considerations again was removed. Remember that question about audit using a management expert or relying on management's expert, which we switched on in 1050 and then it appeared in 1051? Well, that's also now in 1220 because we don't have it on the side anymore. We also removed 2 prompts with regards to systems and controls. The first one was where the old standard used to say it required a system description whenever a class of transaction was significant to the financials. Okay, so that's why I say most of the times you would have had a system description for revenue, maybe for cost of sales, purchase, things like that. But now the standard doesn't have that requirement to have just because it's significant to the financials, which is anyway, how do you determine that? Okay, but we've got the system description requirements for every SCOTB. So if I've got a risk for that class of transaction account balance disclosure, I'm going to have a system description. Right, so that prompt is out from 1051 because we're only going to do risk assessment later. And then the next part is, and I've had lengthy discussions about relevant controls. The old standard used to say whenever controls are relevant to this account balance or class of transaction, we need to do a system description. That's gone now because relevant controls is no longer a term in the new standard. We only need to consider controls when I've got a significant risk, when I want to test controls, and now it's almost like I've replaced relevant controls with the term deemed controls. Okay? Deemed necessary when you want to get an understanding of the controls. But deemed necessary is different to relevant controls. Okay. Right, so those prompts have all been removed, and you'll see them immediately at the bottom of your sections where those questions was. Is the class of transaction significant? Yes. Get the system description. Are controls relevant? Yes. And then you had to go to 1150. That's gone. What have we added? And this one's actually made me super excited. Okay. Most of you will know exactly what I'm talking about when I talk about procedure 1 in audit programs or work programs. Procedure 1, that first one that says, get a list, compare it to last year, check for unusual items. You can probably tell me all those steps in your sleep when I wake you up in the middle of the night, eh? Because you do it for every single one of them. What is that actually? Those are actually risk assessment procedures. So often you almost feel like, why are you doing it now only in the work program? Because you've already assessed the risks. Now you have to go through this again. It was still very nice. I really liked the fact that the person who was auditing that section did that part because that was helping them to understand that account balance. But what we've done now is we said, well, part of risk assessment procedures, let's do it when we're doing risk assessment procedures. So into 1051. So that's why Christian started, or when he started this morning, he said, guys, we can all work in one document at the same time. And 1051 is probably one of the best ones where you're going to work as a team. What I would recommend is that we only work in our sections. So if I'm auditing revenue and PPE, you don't come onto my sections, I won't come onto your sections because then we're going to override our information. But gone are the days, I mean, I used to have trainees who used to say, but I cannot get this, or I cannot do this, or I cannot prove my competence because I'm not allowed to complete 1051. And it's like, what? Why not? Everybody can complete 1051. So every person can still be involved in that procedure 1 if you want. And I'm expecting more people to be part of the planning work. So it's no longer just, okay, the third year is doing planning, the rest of the guys start doing the field work anymore. You can't, there's no field work on the work program. We're going and we're doing our planning part and we're saying, these are each person's sections. Let's do the planning. You go get your understanding of your systems and do these things and update 1051 so that we can get to a point where we can do the risk assessment. Okay. So please don't now go and just plan 1/3 year for 3 weeks before the audit starts and this poor soul has to do all the procedure 1s that are not going to get done. Okay. Let's have a look at 1051 and see what does this now actually look like. 1051. Good. So if we start with property, plant and equipment. Remember now I've got a section, property, plant and equipment. I've still got my lead schedule that I can go to and it clearly shows the amounts. What I do have is also the categories that are really nicely reflected here, and already I've got those TRABs, transactions related to the account balance being PPE. Okay, so I can already see that. When I do risk assessment, I'm not going to do it for these ones, but I can see which are the relevant transactions. What I want to highlight to you is that you can actually right-click on any of these balances. So I'm not going to the lead schedule. I'm literally right-clicking on one of the amounts and actually drill down into the trial balance. Okay. So if I see, okay, plant and machinery, 8 million, what is it made up of? And I can then see these are all the accounts. I scroll right, those are all the different balances making up the 8 million. Okay. Obviously, there's a few. In case of things like depreciation, for example, again, I've got a few items for each of the sections. Sometimes, let's say for profit and loss, this is only the profit and loss, or in this case, the loss on the sale of the property, plant, or equipment that was sold. We will have another profit and loss later on, and then we'll see that. So this is just the loss of the vehicle. Okay, so they really, really nicely reflect. Okay, now I know what my lead schedule or balances are that makes up. Next, you're probably not surprised to see what are the types of risk assessment procedures that you have performed in order to complete the PPE section of 1051. So what did you do? Inquiries, observation, inspection, document, and then we can start with the section. And this here is your lovely procedure 1. From the work programs, no more, well, there will still be a procedure 1, but it will be a different procedure 1 in your work program. That whole section is now in your risk assessment section. Okay, so really, really lovely. And you can see there's too much questions or too many items to consider for one person to complete this whole document. They will take forever. So I really encourage you to have this, I just want to say, keep every section or every person in the team accountable for their little sections. Okay, little or big sections. So we've got the review the balance, check for things that look like they're incorrectly mapped, check for unusual accounts, compare to last year, etc. So this is really just documenting your understanding, and then we get to the transactions and balances section. So the next thing to get really excited about is that there's a little bit of automation. And I say a little bit because it doesn't look like much, but if you really start thinking about how many clicks you're going to save, it is going to add up quite quickly. So just so I can just clarify, I'm not picking additions today. Yes, my property, plant and equipment, if I go to the top, has increased drastically from 1.7 to 9 million. In a normal audit file, I would have selected additions here so that I can go and get this, the procedures and whatnot if there is a risk. So I'm just intentionally not going to select them today. All right. So for now, we say yes, there were may or maybe not have been additions. There were disposals. I'm not ticking them today. Accounting estimates I've selected because the client has PPE at cost, so they need to assess or consider useful lives and residual values. Okay, so I'll select that so that if they become relevant later on, I'll have the relevant assertion, relevant work procedures. Now, when I get to subsequent measurement, I'm now prompted to say what is the accounting policy of this client for subsequent measurement. And the two options from the standard is really cost less accumulated depreciation and impairment, and fair value, okay, or revaluation. So I will go and select cost less accumulated depreciation and have a look at what happens here at the bottom where the depreciation click is. The moment I say, well, cost less depreciation, the software says, in that case, you're obviously going to be accounting for depreciation. So every now and again, when I save one of these clicks, firstly, we're making sure that the procedures are going to be complete. No one's going to forget to click depreciation because it's already done. And secondly, it's one less click for us. All right, we continue documenting, sticking the ones that are relevant and carrying on. That's PPE. Next up then, investment property on the cost model. So what's happened in investment property? We went from 15 million to 10 million. Clearly we must have sold something, and we are showing a profit on the sale of this asset, 1.2, almost 1.3 million. Okay. Again, this is a transaction related to the account balance. We'll go and document them later on, but at least I can see them here. Again, what are the types of procedures that are performed, inquiries, etc. Then my procedure 1 procedures. Okay, working through them, documenting them. They aren't optional, you need to document, just like you did with the previous one. So please don't think just because I haven't put anything in there, they're not important. They are critically important. In terms of investment property on the cost model, I have in this case selected disposals so that we can see those procedures later on. And I've also already selected the cost less accumulated depreciation as the subsequent measurement option. What you will notice is that I specifically switched off the depreciation because with what I want to show you in the work programs, I don't want us to get confused with what's showing in the work programs. I have selected the gains and losses because we know that we've sold this item, and when we get to raising risks later on, I'm going to raise a risk for, has the gain actually been accounted for appropriately? I'm concerned because of whatever happened at the client. I want to raise a risk for the accuracy of the calculation of that gain. All right. That's investment property. Let's just have a quick look at a few of the others. Bank overdraft, right? There, the related balances are also showing types and volumes. And again, literally for every single one of these sections, I have procedure 1, procedure 1, procedure 1. Maybe something you might notice is that in the past, we have every single possible section reflected on the left-hand side, and even as little headers closed up in between the different sections, and I could enable them. They were blue, and then I enabled them, they became white. They don't reflect like that anymore. I will only see the ones that have balances here. Okay, so I know I need to complete all of them. And then again, the relevant considerations in terms of the bank overdraft. If I've got an accounting estimate, I would have ticked it. Our bank overdraft is rand denominated, so there's no revaluation at year end, and there's no service organization. And then if we get to those operating gains and losses, this is where I now have the operating gains and losses that contains more than just the profit and loss. And also just if we have a look at this profit and loss on the sale, there you can see that's loss on the vehicle and the profit on the investment property. That then gives me the combined balance of 1128, even though in investment property we had the 1280. Okay. So very useful for us to drill down there. Again, types of procedures that I've performed in doing the risk assessment and procedure 1 questions, and I've got the option to tick the relevant sections on as needed. Good. Then, moving on to 1055. 1055 is that new document, okay, where we are documenting our understanding of the client's IT environment and our assessment as to whether this IT environment is complex or less complex. Okay. There is additional content in the extended version, and this really is where I absolutely get excited again when I think about extended. Remember, just again, if I use the core version, none of the guidance will show for any of the users in my file. So if in 1020 I said I'm going to do a core version of the file, I'll have no guidance anywhere. Of course, the trick is if I do quickly go and switch on extended, I could quickly see the guidance, know what I need to consider, switch it back to core and carry on. Okay. I must admit though that if I was the engagement partner, I would always go extended. I'm just too scared to miss anything important. Okay. Let's have a look at 1055. What is the extent of the understanding that I need in understanding my client's IT environment? Good. No surprise. Start with what risk assessment procedures that we complete, and then a few questions that we need to complete. So IT applications. What IT applications is the client using? What are they using to process, right? Then questions about their infrastructure. There's questions about their staff. Do they contract in? Do they contract out? Are their staff competent? Do they have enough staff? Things like that. IT processes. And then in terms of our evaluation, we also ask ourselves things like, is the software developed in-house? There are some questions about, is it developed in-house or is it actually bought off the shelf? Now, just a quick reminder here, just because it's bought off the shelf does not mean that no changes can be made. Does not mean that there's no risk or that it's not a complex IT environment, that nothing can go wrong. Now, to illustrate my point, please don't tell me, how many of you, answer to yourself, know the password for design mode in Caseware? Okay, so off-the-shelf package, no risk. But not you, but other people that have the design mode password can break the file. Okay, so there is risk if someone has access to the design mode password or the relevant thing in the off-the-shelf package. So please, this is, I almost cannot emphasize this enough. This is really something where we need to challenge ourselves into. We cannot anymore ignore the client's IT process, the client's IT environment. We cannot audit around the computer anymore, like they used to tell me at varsity. Okay, there's no such thing. We need to understand the client's IT environment. And so there's a question. Let me just quickly see that. Now that I'm trying to see it quickly, I obviously cannot see it. There's a question that asked us, in terms of the conclusion, are specialized skills in IT required in order for us to obtain this understanding? Okay. Do you and I, as our audit team, understand enough about IT, or do we actually need to get someone in to help us to understand if this client's IT environment is complex or not? Now, you're not always going to need that. Some of your clients will have relatively simple environments that you can easily understand, but you mustn't be ignorant of the fact that some of your clients may have more complex systems, and for you to really be able to understand this, you are going to need an IT specialist. Okay. What I find quite helpful also, we'll get to the conclusion just now, but there's this little table really just for you to, almost want to say, visually document what the element or the impact of the IT environment is on some of these accounts. So for example, if there are highly automated or paperless transactions in certain account balances or classes of transaction, you can indicate it by clicking the relevant boxes in this block. Okay, let's go back to the conclusion. Your assessment therefore is either the client's IT environment is not complex, or it is mid-sized or moderately complex, or it is large and complex. Okay. There's not really much of an impact after this, but it should obviously alert some additional risks, some additional considerations as you do your risk assessment after this and as you respond to assessed risks after this. So it's really just a document included to help us to just gather all the information that's necessary for us to be able to move forward from here. Okay, you would have also seen all of the little green parts. So obviously lots and lots and lots of considerations, guidance, everything from Appendix 5 and 6 in ISO 315 has been included in the guidance here. Okay. That doesn't mean you shouldn't read Appendix 5 and 6. It just means this can help you remember what the standard says about it. All right. Good. So that's brought us then to the next part. Christian, you can come and explain what's going to happen now.
Okay, so we received a few questions just for the ones on the webinar as well. And then after we deal with the questions, we'll go through with the changes that was implemented. Okay, so Ninka, if you can just guide me through the questions. Perfect. What will be the impact on review and compilation? So let's start with compilation. Compilation don't share the same documents as review and audit, but in the compilation document manager, there's also a few new documents, and we have changed the procedures in there as well on how they are grouped. So if we go into the compilation engagements, your lead sheet and work program, you'll see that some of the numbers, they just now relate to how we've grouped them within the audit and review side. So 07300, that is now non-current assets. And then we've added a few more documents for the sections that we have then added. If we then think about review, the review methodology didn't change at all. Some of the review documents have changed because it's shared between probe, audit, and review, but it hasn't changed in terms of the methodology itself. So the documents are still the same. 1070 will still work the same. The only change in all of the review documents is the new sections. So review also have the new document manager, also have the new sections, and also within the review documents have the new sections. So you'll have to think about the likely to be misstated items and record those likely to be misstated items for the relevant areas. The look and feel, the risk dialogue, or not the risk dialogue, but the likely to be misstated dialogue for review has also changed. Okay. So to what extent would the planning change for a small audit, and is there any guidance? So the planning did change quite significantly, as we've seen. So 1051, although 1050, 1051, and we've tried to incorporate still the changes or the incorporation of a small audit. Like, as I mentioned in the beginning, what would be a small audit? You'll have less risks. So your planning will be automatically smaller because you have less risks. And then once we now go and start into the 11 documents, those documents only switch on in certain scenarios. So if there's balances, if it was manually enabled, if there is a risk, if they've got a relevant decision, a selected decision. So when you start out, you'll start with everything with balances, and as you move along, the information will go less. And if it's a smaller audit, you'll have less balances, less information, less risks. If it's a bigger audit, you will have more. The guidance we do provide is, again, the core versus extended. So even with, remember, core versus extended is not small versus large. It is what information do you need to document. I also showed you the complex versus non-complex. If your client has a less complex environment, there will be less information. If it's more complex, you will then document less in those documents. But ultimately, for small and large, there is not a big difference in the probe audit methodology anymore. The difference is you will document less because there is less for the client. Okay. So let's take a look at document 1051. This was quite a debate as part of the content owner team discussion as well. So the question is there a way to still do, I want to say, a detailed risk assessment, but now the detailed risk assessment is on the categories, on the note level. And we talk about, when we talk in probe, about level 0, level 1, level 2. So level 0 or level 1 is the account balance, and then level 2 is the categories within the account balance. So we went around and we discussed the benefits versus the cons when we do allow risk assessment on level 2. So we thought about it on allowing you to actually go and raise a risk for property, plant and equipment, but not just property, plant and equipment, furniture and fixtures, motor vehicle and IT. That would give you another, let's call it 500, 600, 700 sections that we then need to respond to. And when we look at the audit procedures that you then need to respond to, is we said the efficiency gain we're going to get based on the assertion that would be relevant. Like, let's say we are concerned for the completeness of machinery, but we are concerned for the AVA of furniture and fixtures, and we're concerned of the rights and obligations for motor vehicles. The actual benefit that you would gain in terms of the procedures by having to do the risk assessment on that level isn't really worth introducing risk assessment at that level. We felt that it would be better just record a risk for PPE, select the relevant assertion, and then when you get to the work program, and I will show you how to do that as well, then ignore the procedures that's not relevant or bring in procedures that would be relevant. So instead of going down into that level, we made a decision to just stay on level 1, not go down on level 2. But we think it is, for us, we feel it is an efficiency way to not go down into the other level. Okay, so now we're going to continue then with the rest of the session on the ISO 315 changes. Thanks, Jana.
Thanks, Christian. Right. We looked at section 10 essentially, and now we're moving into the risk assessment. Remember, now at this stage, you've already gathered a lot of information, a very good understanding of both the entity and, of course, the transactions and account balances and disclosures that are included in this client. So in section 11, first of all, at the financial statement level risk assessment, we've got a few things that changed and across those 3 documents: fraud, inherent, and control risk. So first up, 1140 is no longer 1140. 1140 is now 1125, right? That's really, to a degree, to move it closer to the inherent risk, but also, more importantly, to move the 2 control documents closer to each other so that you can see that you are considering them basically just after each other, or that you can quickly go to the different parts. Remember that 1131 has been removed. The primary reason there is that the new standard does not require you to test the controls for the, let's call it, indirect controls. So the standard refers still to the 5 elements of internal control. We still have the control environment. We still have the entity's risk assessment process. We have the information system that the client uses. Then we have control activities. And lastly, we've got the client's own monitoring of their controls. So ISO 315 revised 2019 now says, well, you've got items in there that are more indirect controls and you've got more direct controls. So the direct controls are still your control activities, but they've also linked the information system related to that with the direct controls. So your indirect controls are now control environment, risk assessment process, and monitoring. And those are the 3 that are considered and documented in 1130. And the standard does not require you to test, let's call it like the operating effectiveness or the implementation of those controls. You will consider whether those controls are appropriate for this client. That's a different type of conclusion. You will still consider whether it's there and whether it's good enough for the client, but the conclusion is not, is it there? Is it implemented? The question is it good enough for this client? Is it appropriate for this client? Right. Then across all three of the documents, we will now assess the inherent risk, or rather the individually recorded risks individually at that point in time. We will assess them. So every risk that you're going to record in 11, 20, 30, and 25, you will be raising a risk and assessing that level right there and then. And then those risks will be what is going to drive your overall risk assessment at the bottom of the document. So in the past, you could record some risks at the top, which might have indicated really high risk. And then when you get to the bottom, you're like, oh, no, it's a low risk, sign of low. Or you could have not recorded any risks and then concluded at the bottom, oh, high risk. Okay, there's a complete mismatch between the two. So you're now guided so that you either then save having to think about it later on, because the higher of the assessed risks are automatically going through to your bottom, or you can't actually record a high risk if you haven't actually recorded risks. So it's really helping you to have your document make sense, to be consistent throughout the document. And then for the overall risks, I'll show you where you're going to be documenting your overall responses, how you're going to address that at an overall stage, and then also some automated responses, especially when we get to the fraud risks. All right, let's have a look then at, first of all, 1120. 1120 is your overall or financial statement level risk assessment. First change already, not a surprise, we need to document which type of risk assessment procedures to be complete in order to complete this document. And then I've got my understanding of the entity and its environment. Remember, in this case, we've got extended, so I've got a lot of guidance or a lot of considerations. And then I said earlier on already, we've got a separate heading now for financial reporting framework and accounting policies, and any possible risks coming from that perspective specifically. Right, before that was just one of the considers, if you want, one of the elements in one of the other categories. Then we have an identified risk section. At this very moment, when I'm opening my file, I don't have any risk recorded. We're going to record one just now. But before or up to the point when I haven't recorded risks, or in your file, if you have not recorded any risks, obviously the risk table will be blank. In my conclusion section, I will just have one question. That question relates to one of our indirect controls that says, have you identified any risks that you would have expected management to identify themselves as part of their risk assessment process, but they didn't identify it? So in other words, is there anything in this document already indicating to you that management's indirect control, being a risk assessment process, is failed? Right. Now, well, at this point we haven't recorded any risks, so we can probably conclude no. And then the conclusion is only low. I haven't recorded any risks, so I cannot make this thing be anything other than low, because I've said there's no risks. That's the quick, simple way. However, in our case study today, our imaginary client is a manufacturer of furniture, and they are very dependent on electricity. So in our firm, we said, well, load shedding today, stage 4, right? This is affecting the client. This is affecting the client's operations, how often or how much of their product they can make. It's affecting their profitability and how many sales they can make, all those things. So we are concerned from our methodology perspective, from our perspective of looking at all our clients, we always consider load shedding as a risk at the financial statement, overall inherent risk for our client. Right, so we're going to record a risk for this. So at any point in time up to this point, you could have already recorded the risk using the risk button, right? I just didn't want to use it there. I thought, let's come and have a look at inherent risk when we are in this specific document. So I clicked on that table, and now I'm able to record the risk. So of course you can either double click, or you can type in the risk, the source, and then you can document your risk. Now I'm just going to type a short word here, otherwise we're going to stand here all day waiting for me to type. But I'm just going to say, right, load shedding is an issue. Okay, that's my risk. You obviously in your file are going to document a bit more. What is the risk? Load shedding is affecting the client. Then we've got really extended guidance here for the user to say, in this ROM consideration field, you can document more than one. In fact, you should be documenting more than one thing. In the past, we used to just say, what does this mean for the file? But But now we're also saying this is also the space, not just to document the effect that this risk could have, but also what you've considered in identifying and then assessing this risk. So really, please use this input field. Right. Document whatever you considered in making your conclusion on the risk assessment. So I'm going to just document the considerations. And now I need to conclude on the risk of material mistake. In the first scenario, we are saying, well, this is a high risk. In fact, it's actually such a high risk that it's affecting our client's going concern. So we are going to document a high risk. In the case where I document either high or medium, I have to respond to that risk. Okay, we can see low just now. If it's a high risk, I also ask myself if it's a significant risk. In this case, we're not going to do a significant risk, but with significant, there'll be the relevant responses as well. High risk, now we need to say, from ISA 330, how will I respond to this risk overall? Now, ISA 330 then has a variety of options, and we split them out slightly just to make it more clear for the user. Are you going to be more skeptical? Apply more professional skepticism. Are you going to use more experienced staff or a person with specialized skills perhaps to address this risk and again, at this point, it's at financial statement or overall level. Are you going to use experts to help you audit the client? Are you going to change the direction, the supervision and the review of the work because of this risk? Will you implement an element of unpredictability in your audit procedures? Maybe you're going to amend the nature and the timing of your audit procedures. And we're going to get to extend the nature and the timing. Then perhaps, and maybe this one more relevant to a control environment issue, are you maybe going to say, well, in this case, I'm not going to test controls. Obviously, that's not really going to help us with a load shedding issue. But perhaps I might say, well, based on a control level issue, I'm going to not test any controls, only audit substantively. And then lastly, will I perhaps amend my performance materiality? So those are the ones from the standard. And then you have the option to include any other matter that you believe is an appropriate response at a financial statement level to respond to this financial statement level, overall level risk. Okay, this is the same for each of those financial statement level responses with fraud or control risk. This is really, really nice. Okay, now, if we had then said this is how we're going to respond, we'll see later on also as to what's going to happen there. But in this specific client scenario, they also have load shedding, but they've made a significant investment this year. If you think back to that almost 8 million rand jump in the property, plant and equipment, significant investment in backup power. They implemented a solar plant or solar panels or whatever the case may be. And so in our considerations, we're actually now going to say, well, yes, there is load shedding in South Africa, but they've got solar panels and an inverter and what. And so therefore, yes, we've considered this risk in our file, but now we believe the risk at financial statement level for this client is low. Okay. I will then click submit. The risk will appear in my table, but I'm not going to have any specific response because it's a low risk. Okay. No response required. And if I now go a little bit lower, I then have the one question to say, do any of the risks that you've identified assess risks at assertion level? Now, firstly, it's a low risk, so probably the answer is going to be no. But at the same time, also, I need to ask myself if I have to go and also record a risk at assertion level. What do I mean by that? Well, we've now said there's a risk at financial statement level, but does it perhaps affect revenue, inventory, PPE, any of the specific account balances assertion level risks? If yes, then I need to go and record a risk for that specific section. Click on that risk. It will give you the drop down and you'll go and record the risk. Okay, I don't want to go through recording a risk now, so I'm just going to take that away. So there you'll click and the same menu will appear where you go and record the risk at that specific assertion level. And I'll show you later on how we record those assertion level risks. But already here, just prompting you to say, do you want to also go and record a risk at assertion level? If not, if I say no, you know what, this is just at financial statement level, happiness, no, and we move along. Good. So that's the first thing that appears when I have recorded a risk. The second thing is that I now no longer have the option to change anything in my conclusion at the bottom. It simply takes the highest of the recorded risks in my table and automate that as my overall conclusion of the risk at this in this document. In this case, at assertion at inherent risk at financial statement level. All right. I quite like this, that it automates it for you. Good. Just one more thing to consider here. We've documented our ROM. Okay. So yes, in documenting my risk assessment, we get a question, and maybe Ninka that's popping up, so I will address it right now. We get a question often to say that when an independent reviewer is going to look at my file, is it good enough for me to just not documenting anything here? Like later on in control risk, we're not going to document anything. Or must I now go and consider, I mean, I'm sure some of you would have been surprised and said, but must I really assess the load shedding risk for every single one of my audit files? It's up to you. It really is up to you. What is important is that when a person reviews your file, they need to see everything you considered and where any, let's call them red flags, funnies, anything that could possibly need to be a risk have been considered and your conclusion on whether they are a risk or not. You can do that basically in one of two ways. One way is to record a risk and document your consideration, why it's low, and record it, assess it as low. Okay? The other option could be to go to wherever the relevant section popped up and made you think, hang on, what about load shedding, or what about this, or what about that for my client, and use your description field to document what the issue is, and then in that same field to continue and say, yes, even though we've got load shedding in South Africa, what is the impact in this client? The client is actually and therefore there is no increased risk in this client. Right. So you don't have to record a risk in the risk table in order to conclude why there is no increased risk. Good. That's 11.20. We've got a risk. We've assessed it as a low risk, and so our overall inherent risk assessment is low. Moving on to 11.25, which is now a fraud risk. The document, again, many of the elements that's changed is not unfamiliar to you now. You've got the risk assessment procedures that you need to document. And then we've got, again, those prompts for incentives, opportunities, and rationalization. I'm actually quite excited personally about 11.25 because I think now it kind of helps us more to also use these questions, these elements, to consider possible fraud risk indicators even at the assertion level. Okay. And again, whenever you come across them, you can simply click on your little risk record button and go and record that fraud risk at the assertion level, which I think in the past people were almost hesitant to do. Right. Questions prompting you to go through those elements of the fraud risk triangle, and then we get to our risk table. Now, what I see today in this document is exactly how your template is going to ship, how you're going to open your file if you have not done anything. So I didn't type anything in those columns. Okay? That is that standard fraud risk from ISO 240 about management override of controls. This is what is in that table. Of course, you can go and record extra risks by all means, right? But this one is already going to be in there, and you can already see what's completed. So now, let's say we've gone through all the information, we've done all the considerations. The only fraud risk that we have identified is the one for management override of controls. So I'm going to right click and say edit risk. It's already there, so I'm going to just edit it. And now I'm going to go through the same risk dialog that we saw in inherent risk just now, but now specifically for fraud risk and very specifically for this compulsory fraud risk consideration. So my source is already referring me to the standard. We've got some information documented there from the standard explaining what the risk is. You can obviously change it if you want. You can add to it if you want, but that is already stipulating the mandatory one. What I would definitely recommend is that you document or add to the ROM considerations here to say why. Remember, we're not just saying what's the impact. We're also saying why do I choose a high, low, or a medium, or in the fraud case, a low or a high risk assessment here. So what did you consider? What was your considerations, your judgment in deciding what to pick from this drop-down menu? Okay, so you'll definitely update your ROM considerations input cell. And then we'll conclude. And in this case, I'm going to conclude there's a high fraud risk in this client. Okay. What happens the moment I say high fraud risk? Fraud risk is always significant. So I can't even untick the significant risk button. It is a fraud risk. It is a significant risk. That's the way it is. Okay. Again, saving me some time, helping me not to miss a tick that may be necessary. And then the next thing that's really helpful in specifically this management override of control risk is that the standard has specified responses at the overall level. Again, you might have already responded to that, almost want to say naturally by default. You would already have had more experienced staff members auditing those sections where management is more inclined to override controls. You probably already had changes to how you're going to review that work. You probably already had unpredictability to certain of those procedures affected, etc. But now we are just linking it, making it really obvious that this is how we are going to respond to this fraud risk. At the overall level, these are the elements that we're going to respond. Okay. And then in this case, because the standard has those specified responses in terms of testing journal entries, we also included the specified response for journal entries in that other cell, that input cell. Good. So all I've really done in this specific scenario is I've updated my ROM considerations. I've decided it is a high risk. I can add additional steps here. I can also choose to respond by being more professionally skeptical if I want to, and there's nothing wrong with that. Okay, I would probably, in my personal capacity, have selected that, but I'm just keeping for the purpose of our illustration, just keeping the ones that are automatically there. I literally cannot go and untick it. Okay, I'm ticking there; it can't untick. Good. So I'll submit that risk. Once I exit the risk dialog, I will now see that my ROM has now been completed. Okay, that's all that's really changed now. Obviously, if I had selected another overall response, that would also have been reflected there. You can, of course, add more risks. For now, we're not going to record more risks. I have the same or a very similar response to say, have you identified risks that you would have expected management to have identified, but they didn't? I haven't really come across any management that identifies themselves as being the fraud risk in their business. So your answer will probably be no. Do any of the risks affect the risk at assertion level? Do you want to, for risk management override of controls, go and record a risk at assertion level? Well, maybe you do, maybe you don't. For now, I'm not going to worry about it whether you say yes or no. You'll go and record that risk using the risk record button. And now I have the default automated risk evaluation or conclusion of my fraud risk is high. I cannot choose that. There's no drop-down menu there. It's high because my table, the highest risk in my fraud risk table is high. Okay, that's the way it is. So in the previous one, in inherent risk, we had low because we had low in our risk table. The overall responses now, this table, the difference between this table and the risk table earlier on that also had the overall responses is that in the risk table, I could have had different overall responses for the different risks. So maybe I had the management override control risk and I had all of those responses and I had another fraud risk. And for that one, I selected professional skepticism. In this one, I almost want to think of it as a consolidation or a summary or a compilation or whatever you want to call it, that this is everything. How are we going to respond to fraud risk at financial statement level overall? And so there then, I would have had all the little tick marks. Okay. So the ones that are already in there is purely just because of our management override responses. Had I selected others, they would have also been selected here. Please note one practical implication is that your other responses you need to type in here. And that's because it is now that consolidation of all your other responses. So if you had one other response for the management override, that we've got all those journal entry procedures, and I had another other, well, which one should be brought in here? So you'll just need to type those in here by yourself. And then, because we've now got an overall risk that is not low, okay, so we didn't have this in inherent risk because we had a low risk. If we had a medium or a high risk, we get this question. Do you want to increase the extent of your substantive work or of all your work for the relevant and selected assertions as part of your overall response? So we've already said overall response, we want to change the nature and the timing, and we want to do more review, and we want to do this and that. Now we're saying, do you also want to basically test more? Do you want to increase your sample sizes? Do you want to have to go further in order to reach your desired audit risk because of your overall fraud risk assessment? Practically, in your ROM calculation, how is the ROM calculation made up? Well, is it a material balance? What is your inherent risk at assertion level? Up to now, in your files today, we also include the fraud risk at assertion level. And then we also say, what is your inherent risk at overall level? What is your fraud risk at overall level? What is your control risk at overall level? And we put them in there as well. Now you can say, but hang on, I'm already responding to the overall level. Is it necessary to include my overall fraud risk in my ROM for the assertion level risks? And that's your professional judgment. Okay. In order to illustrate the impact for you, I'm going to say yes for the fraud risk. Okay, just to show you the impact there. Good. So that's 1125. Then moving to 1130, which is now our overall control risk assessment. I want to remind you, we said we have those 5 elements of internal control, 3 of which are indirect controls, and those are the 3 that's now included here. So if you really literally go and compare the 2, your information system section or bookmark that you have in today's file is no longer in the new template. Okay. We only have the headings for control environment, risk assessment, and monitoring. Good. Again, I'll start with the type of procedures or type of risk assessment procedures. And what I really love about the guidance here is to say, remember, yes, controls in your smaller type of clients are often, most of the time, less formal. So you might not, remember, I still have to say, what did I do? You might not be able to go and observe or inspect a document. You might not be able to get the policies or the ethical, code of conduct for this little business. They don't have that. But if you ask people about it, if you inquire about it, you will know what it is. They might not have a nice big fat policy document, but everybody knows what it is. So through inquiries, you'll be able to get the same information. Good. Then moving to the table itself, what you will notice here, remember, we no longer have to test implementation for these controls as such. So the whole layout of this document has actually changed. I really, really enjoy the way that we consider this. So rather than asking in your current document, is this happening? And you say yes. And then you have to go document the control. And then you have to say, how did you test the implementation, the walkthrough? And then are you going to rely on it? We are saying there are a few things we want management to have done. How do they do this? How does management carry out their oversight? How do they do it? That's your question. So you will go and describe their process. Then, having documented their process, we ask you, how have you verified your understanding of this process? How do you know that this is really the way it is? You didn't just ask the CEO and he said, well, this is how it happens. Okay? How do you know it really is how it happens? And we do that for every single one of the questions. How does management communicate to its employees its views on business practices and ethical behavior? How do they do it? Every business will do it in a different way. The one is not necessarily wrong because they don't do it in another way or the textbook way. We document how do they do it, how do we ensure that this is really how it happens or that we understand clearly what they are doing, and then we move to the next section and the next section. For each of those sections, we have a mini conclusion, and then right after I've said it, I'll show you a big conclusion, right? So with the control environment, we have a few more extra questions about ethical behavior and things like that. But the actual big evaluation is this one, number 16, that says, evaluate whether the element provides an appropriate foundation for the other components. Is this appropriate to your client? Remember I said it's not, do they do it, yes or no? Have they done it? The question is what they have in place appropriate for them? You would obviously expect a bigger, more complex client to have more complex control environment, more policies, more whatever. Is it appropriate for them? Yes. Smaller guy, you're not so worried about it being less formal, maybe not documented, etc. Okay, so that's your evaluation, your conclusion. Is it appropriate for them? Okay, let's look at the other questions in this section. So has management, with the oversight of those charged with governance, created and maintained a culture of honesty and ethical behavior? Okay? Crucial to us in being able to rely on their representations, etc. Then in terms of our IT consideration, is the oversight of the entity's use of IT and all of that they have, is it appropriate for them? Yes or no? Okay? And then we've evaluated whether the control environment is appropriate for our client. And lastly, just to say, is there something that you want to report to management, any deficiencies that you come across in their control environment? Good. Looking at the next section then, risk assessment process. Again, does management, how do they do this? How do they do this? How do they do this? Right? Asking yourself all those questions, getting to the conclusion then to say, right, now evaluate. Is this business's risk assessment process appropriate to their business? Yes, it might not be textbook again, but is it appropriate to them? Yes. Monitoring, similar process with your conclusion, whether their monitoring system is appropriate to them. Okay. If I do identify any risks, I'll record them there. I intentionally do not want to record risks today so that we can see the difference between our inherent risk, where we have a low risk, and control risk, where we're just not going to record any risks now. So no risks. I'll have my little question about risk assessment process, whether I expected management to have identified any controls. Well, we didn't identify controls, so that's fine. And then again, because I haven't recorded risks, I've got the little drop down, but my only option is low. If I change my mind, I don't like it to be low, I've got to go back and change the stuff so that I can have something other than low here. And that's through recording risks. Good. That is then financial statement level risk assessment. Inherent, fraud, and control risk. Now we move to the account balance assertion level considerations. And first up, we have the controls at that level. So basically from the standard, I talk about those direct controls now. Okay, so we're going to consider the information system as well as the control activities. So no surprise then if the document name changed to information system and control activities. The objective of this document is to document our understanding of the entity's information system and to the communication relevant to preparation of financial statements. And then where relevant, almost want to say where necessary, also to then document our understanding of the control activities. So I want to reiterate, more often you're going to have system descriptions, almost want to say, and not necessarily controls. Because you have to have a system description for every account balance, class, or transaction disclosure where you have recorded a risk. Okay, you don't necessarily have to consider the controls in that case. Good. Just want to check my script notes here as to whether we need to go to another one. No, that's 1116. Good. Good. So if we then go to 1150, right at the top, we say, what are the risk assessment procedures that are completed? Again, inquiries, etc., etc. Now, this to me is almost your script note. If you know, shucks, I have to do 1150, but when must I do system and when must I do something again? So what is the minimum requirement? That's question 2. Do we elect to identify and evaluate controls, okay, other than the bare minimum? What is the bare minimum? For controls that address significant risks, for controls that address risks for which substantive procedures alone will not provide sufficient appropriate audit evidence, i.e. I have to test controls. Well, then I have to identify controls. Do we have to also identify controls over journal entries. That's part of our response at overall level for that fraud risk for management override of controls. We have to. And then, do we plan to test other controls for operating effectiveness? Well, in that case, those will be the ones that you're going to do. And then, do you want to do any others? So that's that part where on the slide earlier on we said where you deem it necessary. If you say yes here, then you deem it necessary to identify controls for other elements as well. Good. So that's just a quick question to help you to check what's the minimum. And of course, if you do say yes, some of the questions will actually change elsewhere as well. For now, I'm just going to keep it to know we've got enough controls already to document and to consider. Good. Then when we get to accounting records, I want to show you how are we going to document the controls over journal entries. Now remember now the journal entry one, it's right at the top because it relates to accounting records, which relates to one of those general work programs. We don't do risk assessment there, so I can't say, well, it's a significant loss or transaction, I have to go and get a system description. It's part of our overall response that we have to go and consider controls. So it's slightly different to the others. But because it's first, we're going to look at it right first. So first of all, journal entries, I need a system description. How does the information flow in the business to get journal entries recorded in the accounting records? Okay? You can document your system description there. You can reference it to your other document if you want. And now, we must identify controls for journal entries. So I've got the question, did management establish any controls? Well, if they didn't, that's a problem in itself. But yes, they have established controls, and we will then go and record controls through the process. In this case, I'm going to just go into the specific control that I've already recorded. Scroll to the top. And this is where I will now go into my control dialogue. Sorry, I'm mixing up my words. Control dialogue. So before we look at the risk dialogue, and even at assertion level, we will record the risks separately from the control. So this is now the control recording, the control dialogue. So I'll document my control that I've identified. In this case, you're going to document your proper control. I'm just saying for us to know where we're going. Control over journal entries. This and this happens, that and that, this and one approves, blah, blah, blah. Go. In the control dialogue, I can then go and link this control activity to more than one section if relevant. In accounting records or journal entries, I really don't think it's going to be relevant. But when we get to the bank one later on, there we might actually find that we're going to be able to link more than one section to it. And then that control will automatically appear for those sections. So in this case, accounting records is already ticked because I was in accounting records when I started to record this risk, right? Is the control designed effectively to address the risk of material misstatement at assertion level? So this here is where I start with one of my first questions about controls. Before I can decide if I can rely on controls, my first question is it properly designed? And we said earlier on, designed means it will either prevent material misstatements or it will detect and or correct material misstatements. So is it properly designed? We consider it and we document, yes, it is properly designed. All right. Then I need to explain how I determined that this control was implemented. Most of the times, this is where we do our walkthrough documentation of the controls. Okay? You don't have to only do it through walkthrough. So if you test implementation through another manner, by all means, this is your space where you're going to document that thing. Okay. And then next up to the question, so it can be properly designed. In my mind's eye, I always think about where a financial manager or somebody thinks of really lovely controls. And then when it gets to the debtors clerk or whoever, they say, heck, now I've got enough work already to do. I'm not going to do that too. So they're not actually implementing that control. It can be the best designed control ever, but if nobody's trying to actually apply it, it's not going to prevent, detect, or correct misstatements. So in this case, I then have to conclude whether the control is sufficiently implemented. And then I'll get to the question as to whether I want to rely on the control. Reliance is really where I say, do I now want to go and test the operating effectiveness? So in your firm's methodology, this is where you're going to test 10, 20, 22, 28, 30, how many ever you're going to go select to test if the control is working, like sample. This is where we're going to say, am I going to select a sample? Yes. Then I'll go test the 22 or whatever it is. If I say no, then I won't be testing controls. In the case of our scenario, I said, yes, we want to place reliance. And I then went to go and document my control test procedure as it's going to appear in the work program for accounting records. Right. That's the way of documenting then all controls. So this is the controls that we previously considered in 1150 and then only did the control testing procedure in 1220, and it was a bit, you know, not flowing through the process necessarily. And also those controls addressing significant risks will also be documented in 1150, and we will also follow the same control dialogue for that one. Okay. Right, so I've documented my control, documented my consideration. I'm now going to just submit this, and then my documentation for the control and the control test, the test of control work program procedure is documented in my file and will appear in my work program. So if I go to accounting records, I now have my table with controls. If we just quickly have a look at, I'm just going to show you PPE. Okay, this here is where I'm prompted now to do the system description. Here's a bit of a chicken and an egg question. We have not recorded a risk for PPE. We haven't. We're still busy. Yet, how can I necessarily identify risks if I don't know how the information flows to get to a risk? And that's the standard, and the IWSB uses the term iterative. The process really is iterative. In some cases, you're going to say you want a system description to be able to understand how it's accounted and then realize, oh yes, there's a risk. You're going to go record the risk and assess the risk. In other cases, you're going to get to the risk and you're going to say, oh my heck, there's a risk here. Or yes, I've always known there's a risk here. And then you're going to be prompted to go and do the system description. So 1150 and 1160, you are going to be jumping back and forth between them. Whether you choose to first do 1160 and then 1150, After doing 1150, you're going to have to go back to 1160. Or whether you choose to first do 1150 for those sections you know you have to do your risk assessment, and then come back for the others. Either way, you are going to jump back to double check that you've covered both sides. Right. So whether I then choose to do a system description or whether I have a risk recorded, this is basically what I'll be prompted for property, plant, and equipment in this scenario. You can see it's already a lot more lines than what I had just for accounting records for the journal entries. Right. So really it takes the wording, and again, you've got some of those green considerations, wording from the standard as to what must be documented. I almost want to say, to a large degree, it's simply a system description, but there is enough guidance. It helps you to meet all the requirements. It also helps you to consider how the assets are maintained, like the documents and all those things. And then, of course, IT elements, the integrity of the information, and things like that, that is quite relevant. So a lot of guidance to help you to document what's relevant. Even here, things about the resources in the IT environment. Okay, so that's our documentation of the system description for PPE. Now, this question here at the, question 5. Perform a walkthrough to confirm your understanding of the system description, the process to initiate, record, Then you still remember when we spoke about walkthroughs for confirming your understanding of the system description? In our file, our firm settings said we will choose per file whether we're going to do walkthroughs to confirm system description, to confirm our understanding of the system description. Then in 1050, we said, yes, we want to do it for this file. And now the question appears for each of the sections where I do my system description. If my pro firm settings had said yes for all files, I wouldn't have had that question earlier on to choose because we've already chosen for all the teams, and the question appears. If you see your file does not have this question, what does it tell you? Our firm settings said we will never do it, and so we won't be prompted ever. Oh, good. Now, then, of the payment appear or link up with those sections also. Okay, so what does this mean? I will record everything once in this dialog, and it's going to appear in all those sections. That's really what it does. Okay. Next up then, same process as before. Is the control designed effectively? You consider design. Will it prevent, detect, and correct? Yes. Moving along. Do your walkthrough testing, your implementation, and then ask yourself, is it properly designed? Yes. Now, what we didn't see under the journal entries one earlier is that now I've got the 6 classes or the groupings of assertions, because this control affects specific assertions. It doesn't affect no assertions. It affects some. Journal entries, there's no risk assessment, so there was no assertion. But now for this one, we want to actually document the assertion that's linked. So in this case, it will probably be the validity of the payment, and therefore then let's select occurrence in this case. Okay. And then I'll ask myself, do I want to go test the operating effectiveness? Yes. And I will document my control test procedure as it is going to appear in my work program, right? There won't be another space for me to document that work program procedure. It's in here in the control dialog. Click submit, and it will update my table in both the bank section and the other sections that are selected with this control. And this again is one of those documents where we can all work in the same document. The person involved with PPE will record their section, their system description, their controls, bank, etc. Every person will do the work on their individual sections. Because we are still not at a point where we can do field work. We have not assessed risks yet. No. We can now go to that. Okay. Now we finally get to 1160. Now we can go and record the inherent risks at the account balance level or assertion level as ISO 315 refers to. We have automated the risk assessment for that section based on the risks that you've recorded. I'm going to show you where that is. Okay. And we have removed the separate fraud risk assessment because fraud is now one of the inherent risk factors that I will consider in recording an inherent risk. All right. In recording the risks or showing you the document, I'm going to use 4 different scenarios. And it's obviously to show you the impact on the work program for these 4 different scenarios. First of all, we're going to look at property, plant and equipment, which is a material balance, and we're going to record a risk for that balance specifically for AVA. And just as a background or my reason or my justification, I'm not concerned about depreciation being incorrectly misstated or incorrectly recorded in the income statement. I'm concerned about the client not appropriately assessing the useful life and specifically the residual value of those new solar panels. And because I know they may be a little bit, shall we say, lazy to appropriately record those, they might be recording incorrect depreciation on them, and therefore the carrying value of my balance sheet item can be incorrect. So the valuation allocation assertion at year end can be materially mistaken. Okay. Of course, in many of your cases, you're going to say, well, depreciation on the PPE side and the income statement is a concern. You'll go and record it as such and move along, but by all means. But I want to specifically show you what happens when I've got a transaction related to the account balance, but my risk is recorded for the account balance itself. Okay. That's the first scenario. Second scenario, investment property at cost, where we had sold that item. Remember, it was 15 million, now it's 10 million. We're not worried about investment property. We've considered the inherent risk factors and we're not going to record any risks for the balance sheet. Right? Operating gains and losses, we're going to record a risk there for that gain on the sale of the investment property. We're concerned maybe it was very complex or something and we don't know if they have accurately recorded that profit. Maybe that may be materially misstated. And then bank overdraft is not a material balance. Our materiality is like 1 million and this bank overdraft is only 400,000. I have considered whether it may be incomplete and I have decided there is no completeness risk for this bank overdraft. Okay. I want to state that very carefully because a lot of people say, but surely you're going to test complete. I will consider if it is incomplete. I will assess if there is a risk of incompleteness and my conclusion is there is no risk for incompleteness. Okay. You can obviously record many more risks for these 4 scenarios and for all the other balances in this Caseware file. We can stay here until Monday morning and address all of those. But obviously, I'm sure most of you want to at some point go and have a weekend. So we're going to stick to these 4 scenarios just for today. All right. Good. Let's go and have a look at 1160. Right, so property, plant and equipment. There's our balance and you can see it's a material balance because it's got that little red star. Before I've recorded any risks, do you notice a few things? Firstly, we only have one line now. Inherent risk assessment at assertion level. There's no more fraud risk assessment at assertion level. We also don't have little drop-down menus anymore because whatever you're going to do in your risk assessment table, is going to automatically flow through here. You currently have no inherent risks recorded, so you have no inherent risk at this stage. Okay. Very, very intentional to have something like no IR as opposed to not applicable. Not applicable is something like, for example, cut off for your balance sheet. The assertion doesn't actually affect the balance sheet item. That's not applicable. No IR means you have not recorded an inherent risk at assertion level. Right. And then, of course, we've also got our two new columns at the end for the two new assertion groups. Right. We said we're going to record a risk for property, plant, and equipment. It is a material balance, but our concern here is with accuracy, valuation, allocation at year end for the fact that they might not be recording the useful lives and residual values appropriately. So I click on my risk table, click on the risk record button. Anywhere where you come across the risk, you'll be brought to this risk dialog. In my source, you can double click just and then describe the risk. I'm just going to say incorrect depreciation, just for that, just to have something there. Okay, you're obviously going to document it a lot nicer there. Then I can go and allocate this to sections. So just like we had the sections with the controls just now, we have the same thing for the risk. In this case, remember, I'm saying it is not also affecting my operating expenses or my cost of sales. Remember, depreciation can also be in cost of sales. I'm not worried that it's going to be materially misstated in my income statement. My concern is the balance sheet. Okay? Of course, again, if you are in your, when I say real life client, you tick them here and they'll be automatically recorded. You don't have to go and record them 2, 3, 4 times. It will appear on all their sides. Good. That's the sections. Now the question is, why do you think this is a risk? What is your inherent risk factor? Is it because of complexity, subjectivity, because there was a change, because of uncertainty, maybe because it's susceptible to management's misstatement due to management bias, or perhaps a fraud risk factor? If I click fraud risk factor, note please that it is automatically a significant risk, and then I'll have to respond with my significant risk response and whatnot. Okay, so that's also helping you to comply there. I'm just, for the sake of today, going to say, well, it's susceptibility to misstatement due to management bias. Okay, they honestly believe they're not going to sell those solar panels for anything at the end of the useful life, or they honestly believe the useful life is going to be until infinity, whatever the case is, and so therefore I don't believe they're going to be accurate. The implication is now your cell where you're going to document what is the impact on your balance. It's a similar cell to what we had in the past. I think we just changed the word, but it's still, what's the implication? What's the impact on your account balance in this case? And you're going to document your implication there. And then select the relevant assertion or assertions. And now relevant, it just happens to be the word I use, but this will also become now your relevant assertion for property, plant, and equipment. We said we're concerned about accuracy, valuation, allocation. So that's the one I'm selecting. And by doing this, I'm literally switching on the procedures in the work program for AVA in the property, plant, and equipment work program. Now I need to assess the risk. What is the likelihood that this misstatement is going to occur? Well, let's say likely. What is the monetary impact of this? Okay, let's say medium. Those are the two elements of assessing risk. Okay? So that's going to form my inherent spectrum of inherent risk. That's what's made up here. And then automatically through the probe methodology, you are told this means, based on your selection of likelihood and monetary impact, this means that your inherent risk is medium. If you now have a high, for example, let's change this to show as high. There I've got a high ROM, inherent risk rather. Okay, now it's saying, remember, significant risk is something that's on the higher or the upper end of the spectrum. So now consideration, only in extended. Make sure, do you not want to maybe mark this as a significant risk? You are on high, maybe, yes, no, you can choose no, that's fine, then you don't tick it. But that will only come up when you have a high inherent risk. Okay, if you want to make it a significant risk and it's showing medium, well then maybe your likelihood or your monetary impact needs to change slightly. And then here are those 2 points where we will then, obviously for significant risk, click it. But also, remember we said we have to identify controls when substantive procedures alone will not provide sufficient appropriate audit evidence. In other words, I have to test controls. If I have that risk, I will tick it here which will then prompt me to go and obviously go and identify those controls in 1150, which means we were in 1150 just now, we're in 1160 now, we need to go back to 1150. Okay, that's recording the risk for property, plant, and equipment, only for the account balance AVA. What will you see what happens now? Very soon. It's just quickly processing. Remember, we've got 70 sections in here now. Okay. What's happened? Now I've got that risk recorded. It's clearly showing me all the stuff. And I now have a risk for AVA. All the others are still no IRs. I have a medium inherent risk for AVA. So there's that automation of your risk assessment. No more going, what's it? LTAB, ne? I know. No more of that. It automates it for you based on the input that you put in the table. There's still space for your specific materiality, and you still have your reason input cell where you can document anything more that you feel you want to still document to substantiate whatever's happened here. One thing that changes, or not changes, but that I want to highlight for your assertion level risk assessment as opposed to your overall level risk assessment. If you have a low risk recorded here, you will still have procedures in the work program. So remember, at overall level risk assessment, we said record your risks either or document your risk considerations in the little cells in 1120 or somewhere, or record the risk and just make it low. That's the same thing. Here, if you record your considerations somewhere else, but don't record a risk to show that your assessment was low, you won't have procedures. Okay? And this is why we can't just have low for small, because then you would have had audit procedures exactly the same as today. In all your work programs would have all the assertions, all the work procedures activated. And we don't want that. You don't want that. I'm sure you don't want to do stuff you don't need to. So rather spend the time, energy, and the brain power doing a proper risk assessment to really know where there are risks and leave out the ones that don't have risks, and then go and respond to only those ones that are relevant. Good. Investment property at the cost model. We have a material balance. We have considered those inherent risk factors, and we have legitimately concluded with almost want to say a clear conscience. We've done what we needed to. There is no risk of material misstatement in investment property. Okay. See a few people looking at me like, really? Can I really conclude that? Okay. If you've really done a proper risk assessment process and really understood your client, you can conclude that there's no risk. Okay. Let's leave that thought there for now. No IRs for all 6 assertion groups. Okay. Then if we go to the other risk or the other element that we said we're going to address, bank overdraft. Bank overdraft is 400,000 Rand. I'm not recording any risks. Don't worry about the fact that mine is currently showing 0. It's an old version. Okay. No IR, exactly the same as for investment property on cost. No risk. Moving along. The difference is investment property on the cost model has a material balance. Okay, we'll do something about that just now. For now, we are truly assessing inherent risk at assertion level, and there's none for investment property. Then the last one, the 4th scenario, is in operating gains and losses because of that profit on the sale of the investment property, and I'm going to record a risk for that one. So again, I've got no IRs there all around. Recording my risk here. Describing the risk, profit on sale of investment property. And then I will just tick operating gains and losses. Again, if you for some reason wanted to go and tick investment property on the cost model, you could have, but I mean, it's the profit that we're concerned about. The cost and the accumulated depreciation, all those things is gone out of investment property. Okay. So it's recorded there, have that gain and loss linked. Maybe it's because of complexity. Select the inherent risk factor. Document your implication. Select the relevant assertion or assertions if it is more than one. Consider your likelihood. Your inherent risk is automatically assessed, and click submit. Okay. So we've got 2 risks recorded and 2 balances with no risks. Okay. Just give it a moment to think. Good. I just want to refresh my 1110 so that I know everything runs where it should be running. And now we are finally at the point where we've completed our risk assessment. And we are now at that point where we can say, how am I going to respond to these risks? How am I going to go audit? Okay. I can still not send my staff out to the field work because we haven't decided what we're going to do. So now we're going to go and complete our audit plan and strategy, 1220. Remember, this is where those audit considerations come in. Am I going to rely on the work performed by a management expert? Yes or no? And if I say yes, then I'm going to go and switch them on for the individual sections. Stock count, bank confirmation, any other external confirmations, etc. Those things are all going to come in 1220, which actually makes complete sense because now I know what I'm working with. What is also included is that we now not only show the ROM, but we also show the inherent risk. Okay? And then we're going to see what about that investment property at cost that has a material balance, but for which we have no risk. Okay, because I'm still sure most of you think, no, that cannot be. Okay, and then we'll have our stand back procedure. Let's have a look. Just want to again update these tables. Normally in your audit files, you're only going to open the documents in individual order, so you won't have to refresh as such because you're going to have the tables will refresh automatically. So first of all, as we currently have in 1220, the financial statement level risks appear. So inherent risk at financial statement level, we recorded our load shedding risk. We documented why it's found to be low and it's showing low. There's no specific responses. The risk table for the fraud risk at financial statement is showing all the risks. It's showing the responses and it's showing two things. The overall conclusion for fraud risk being high. And then especially to our reviewers, the managers and the partners, even here you can see we said, yes, we are going to increase the assertion level ROMs because of our fraud risk. So we decided that our response at overall level through supervision and additional procedure, not additional procedures, the nature and the timing of procedures, more experience of those things were not enough for us. We wanted to also do more work. So that I can see this here already. Okay. Control risk at financial statement level, this now the difference between your inherent risks, where I've got a risk recorded, and your control risk, where there's no risk recorded, both of them being low. Okay. And then we get to the risk at assertion level. So first of all, the overall audit considerations. I've got the question, are we going to use evidence prepared by management's expert? And let's say yes, just so I can show you where those come up. Let's say we're not going to use work prepared by an auditor's expert. Okay, again, I want to obviously show you the difference between the two. And then I've got the questions about external confirmations and all kinds of other things that I can also decide. Good. We are starting with property, plant, and equipment. Our 4 scenarios still. Property, plant, and equipment. The ROM is now reflected as medium 2, medium 2, medium 2, medium 3. Not applicable, medium 2. Why medium 3? Well, because we've got a risk at inherent risk assessment at assertion level. Okay? That medium 2 is made up of the fact that it's a material balance and the ROM is also increased, well, for all assertions, but it's also increased because of a fraud risk at financial statement level that we said we want it to pull through, to come through in the ROM calculations. Okay? The difference between the medium 2 and the medium 3 is because of that medium. But now, does this also bother you? We've got no inherent risk, yet there's a ROM. Could be a little bit confusing to the users, huh? Okay. So for the time being, we're going to keep it like that. But at the end, we're going to do some magic and make that make more sense. All right. This line that says select assertions for testing is only for a very special reason we're going to see just now. You do not, please, do not just say, oh my goodness, I forgot to record a risk for existence. Let me just quickly tick this and then the procedures will switch on also. Okay. If you do this, you will not comply with the standard because the standard says if there's a risk, you need to record the risk. You need to assess it in terms of likelihood, magnitude. You need to go and get a system description and so forth. So that's not going to happen when you just click the block here. You'll have to go back to 1220 and go and record that risk. Good. Now, audit considerations for property, plant, and equipment. Will I be using management's expert? I have the option to tick management's expert here, because we said at overall level, just earlier, we said, yeah, there might be instances where we're going to do a management expert. I do not even have the option to use an auditor's expert because at overall level, we said no. Okay. The same with external confirmations and all kinds of other things. We said no, so the option's not even there. The nature and the timing of substantive procedures was one of our options of how to respond to the financial statement level fraud risk. Our overall response was, well, we're going to give an option to also change the nature and timing of some of the procedures. Now you can say, are you going to do it here for PPE? Or are you going to do it later for bank? Are you going to do it later for revenue? Indicate where you are going to do that. All right. And then if you want to place reliance on controls, you could have also had that indication later or earlier on and then indicated it here. Then the audit procedure side, you're probably used to that. Okay, we've still got significant risk response, only available if you have a significant risk. Test of controls will automatically be ticked if you said you're going to test controls. Required procedures is switched on in this case because we have a assertion, a relevant assertion, and therefore we need procedures in the work program. Okay, that's why my required procedures switched on. You can, of course, go and decide to go and do more work. Okay, we're going to also do extended analytical, extended test of detail. That element is not changed, so you can still go and decide. Well, my ROM is going to be medium 3. Will the required procedures be sufficient for me to conclude on the evaluation and allocation of PPE? Maybe, maybe not. Then we've got this element of accounting estimates. Remember the accounting estimate standard, and this has been there for a while already, says we need to respond in at least one of these 3 ways. Events, testing events after reporting date, testing management's estimate, or developing our own point estimate. And we need to indicate at least one of those 3. Again, if you tick that, it switches on the procedures in the work program. And then we've got the space to document all our judgments made. Basically, that cell is to document anything that you want to explain why you ticked or not ticked or what. Okay. Good. That's property, plant, and equipment. So we've got required procedures in 305.10, I think. Yeah, that's that section's work program. Investment property on the cost model. We had no inherent risk for any of our assertions. Okay. I love how the partners, especially, they're like focused on this thing. Not that the others are sleeping or anything, but like the partners are, no, this can't be. Really? Really? Okay. So what happens here? All of them are no inherent risk because we did not record any risks. The risk of material misstatement is showing medium 2, but that's because of all the other stuff, material balance, fraud risk. And then I've got this red thing. This red thing, for those of you that might struggle to read, says select at least one assertion for this material financial statement item. So this is where we then bring in that, hang on, you have to do at least something for every material balance. Can't do nothing. Great that you've done your risk assessment and that you're comfortable there's no risk. Fabulous. But you've still got to do something for every material balance. What is that something going to be? Well, this is where you're going to use that line for select assertion, and you're going to select which assertion you're going to test for this material balance. Okay, so now I can already say, okay, so which one is that going to be? So at one of the regional sessions, the one person said, well, the easiest one. And then the other said, no, the most difficult one. So which one is it? The standard gives us an answer. The standard says you have to test at least one assertion. Which one is it going to be? You're going to ask yourself if there was going to be an error. Okay, we've already said there's no risk of material misstatement, but if there was going to be an error, what is the assertion that is most likely to have that error? That's the assertion you're going to select. Okay, so if you determine there's no risk, which one is the most likely to have an error? That's the one that you're going to select. So for the purpose of today, I'm going to select presentation and disclosure. I intentionally do not want to test AVA because we're going to show AVA for property, plant, and equipment. But you're going to ask yourself, what is the most likely one? So I know that another engagement partner had said to me, but surely I'm going to at least want to test that there's still a title deed in their name. Yes, by all means, if that's what you want to do, then do that. You could have also done that, from my perspective, potentially even under your understanding of the entity. And as part of your risk assessment, observe, inspect, inquiry, well, I could have inspected that title deed. Okay. So you could have potentially done it there, Or you could have said, no, actually, you know what, I rather want to have it in my work program, record a risk for existence and move on. But for now, for today, we have no risk. We've selected the assertion. So in some of the slides earlier, you might have heard selected and relevant assertions. For investment property on the cost model, presentation and disclosure is now my selected assertion. Okay. I quite like that. It makes a lot of sense to me, at least. I obviously didn't come up with it, so I can can get excited about it. Okay, now this is my stand back. Did you evaluate, we're still just with investment property on the cost, did you evaluate all audit evidence available to date and conclude that there really is no inherent risk related to this balance? If your answer is no, you have a problem. Go back to 1160, record the risk that you didn't record, come back, and then, well, then the answer won't even be here. This question will disappear because you've already recorded the risk there. But because we really have no inherent risk, we're saying, just double check, are you sure? Yes, I'm sure. Moving along swiftly. I've already selected the selected assertions. I will have some work, but I haven't recorded any risks. So now I've got the required procedures selected there. Right? On the left-hand side again, I can switch on the audit considerations as I believe is relevant. Let's go and have a look at bank overdraft. Okay, so we've just looked at the material balance, no risk. Now we're looking at the bank overdraft, that is an immaterial or not a material balance, no inherent risk. There's no red warning. Right. You went through the work, you did your risk assessment, your understanding of the client's business, you concluded there is no inherent risk. There's no inherent risk. So there's no required procedures. Okay. This is obviously a bit extreme. So in your client, you're probably going to say, hang on, I want to test completeness, or hang on, I want to do this, or I want to, by all means, you're going to do those, okay? Record your risks, do them. But this is what's literally going to happen when you have no risks. And that's why I said right at the start, I said, guys, we cannot go out and do an audit without the planning being done. Because up to this stage, it's every single section would have been as good as no inherent risks up to this stage. So only once I've completed everything will the stuff really be in the fieldwork. Okay. Also, just in terms of the audit considerations, you do have the option to switch on the bank confirmation needed. Okay, so you'll remember in the current 1051, for example, it says, do you want to get external confirmations other than a bank confirmation? Because the standard assumes we're probably going to want to consider getting a bank confirmation. So the consideration is there if you want to get a bank confirmation. The last option then is our class of transaction, material balance, with a risk recorded, all right? And I have my required procedures in there. And that's how you'll do every single one of the sections. There's another part that I need to do on 1220, crucial part. Okay. Before we move on and run into the field, we're going to go do all those things because we are just so keen to get some working papers in the files and get the audit done. We are now sick and sat of doing the risk assessment procedures. We need to, again, just stand back, just check before we get going. So the first question is, did you consider how the higher risk of material misstated financial statement level, in our case, that was the fraud one, fraud at a high one, affects the identification and assessment of risks at assertion level? Okay. Yes, happiness. If you say, oh, it's now forgotten, I'll go back and go redo it because you don't have the option for a no here. You have to. We're just helping you to check and to make sure that you did consider the ones you had to. Next question is, did you record a risk for all instances where inherent risk factors were identified? In green here, it says you cannot just click select assertion because then you're not going to comply with the standard. Okay, that's really why we're asking you that question. Make sure that you didn't select an assertion where in fact it was a risk and you had to actually record it in 1160 and actually go and in 1150 document your system description and so forth. Okay. Again, you only have the option to select yes. So if the answer is no, go back, fix it, come back. And now, this is the magic. Do you approve the audit plan and strategy? Now, initially when I saw this, I was like, surely only the partner can do this. Okay? The partner is going to review the audit plan and strategy, and please, engagement partners, you have to know that you are happy with the content of this document before the fieldwork starts. Because if you're not happy with the content of this document before the fieldwork starts, there's going to be work programs with no procedures in it. And you might not be happy with that after the fieldwork's done. Okay. So, yes, the trainee or anyone can click this button. Okay. Effectively, what is going to happen here, because the partner is going to sign off the whole work with the whole document. Okay. So it doesn't have to be the partner that ticks this. But this is where the magic happens. It says, when you click yes here, the assertions where no risks were identified and no assertions were selected for testing will, well, let's have a look at what it currently says. Currently shows the medium twos. Okay. It will now show, let me go to the conclusion. It will now show NRS, which is indicated as no risk, not selected. Okay, so once I then say yes, again, you can't just say no. Okay, if you don't approve the audit plan and strategy, fix it. Now we have no risk, not selected. Now, any reviewer will clearly be able to see, oh, I see, there was no inherent risk. We've really done the work. We've assessed inherent risk. Happiness. We haven't selected the assertions so clearly. There's no effort, no work, nothing needed for C, EO, RO for property, plant, and equipment. Right. So that's quite important for everything to make sense as we go along, even up until the finalization when you do the partner sign-off. The partner must be able to see, why is there no work done for this assertion? Well, NRS, no risk, not selected. Good. I think we are ready to go into the work programs. Now, the work programs, in case you've missed it up to now, it will only have procedures for relevant assertions and selected assertions. And if perhaps your firm or your team has been one of those where you just do everything that's in that work program from start to finish, whether it makes sense or not, okay, please don't do that now, because we can only switch on all the AVA assertions and make sure none of the C's and the EOs show. But it doesn't mean all the AVA assertions is relevant to your risk. You only have to do the procedures related to your risk. So let's have a look, for example, in just the first one, PPE. Okay. In PPE, we've got the risk summary. So the overall risks. Then I've got the assertion level risks showing clearly no risk not selected. I only have a risk for AVA. My risk of material misstatement for that is medium 3. And somewhere I had, at the bottom I'll see the desired audit risk. There's my materiality. Now I've got procedures. Okay, I've got required procedures. First of all, for the account balance. Okay, that's the first thing you need to notice. You've now got procedures for the account balance being the sections procedures, property, plant, and equipment, the balance reflected in the balance sheet. The procedures are activated for AVA because our risk for the balance sheet was AVA. I've got a bunch of procedures there. Most of them are relevant, but I know, having looked at it before, that procedure 6 is not relevant to our risk related to the depreciation and the useful lives and the residual values, because it talks about checking the condition for any indication of impairment. We didn't raise a risk for impairment. Please don't go and do this now. Okay, you can if you want to, if you're ahead of budget and you really feel like doing something extra. But there's nothing that says you have to do it. So right click, ignore this procedure, and it will go away. Okay. So there's the next question, concern, issue. I see those faces. How do I know what these guys have hidden on my, okay, I'll show you. So go to show, okay, first ignored procedures. Ignored procedures are where through the inputs that we put into our file, the procedures appeared in the work program and someone physically chose ignore procedure. Okay, that's ignored procedures. So now I'm going to show not just the procedures in black that is in the work program, but also the ones where someone said ignored. And I can bring it back as easily as right-click, show procedure, right-click, show procedure. Okay. So that's ignored procedures. If I want to go back to the actual work program again, I can just click show default. Now there's another one. Maybe we really tried in doing all the stuff, but we also want to test we recorded a risk perhaps for additions. And we want to check if those additions really happened, or if they were accurate, or whatever the issues. We recorded a risk for AVA for additions. But I do not see, and I'm not going to scroll up and down now, there is no procedure in this thing for additions. Now what now? First prize, best practice. Go back through your procedures that you followed and check, where did I miss something for additions? Now you will probably say to me, but right at the start, in 1051, we did not tick additions for property, plant, and equipment. That's the solution. Okay, that's first prize. Go to 1051, tick additions, and it will now probably appear. However, I'm under pressure. It's midnight. The partner wants the file tomorrow morning. I need to test additions. How are you going to test it now? I don't know. But you're going to test it now. Okay? I'm going to go to hidden procedures. Okay, so Christian told me there's not only in the PPE work program, okay, don't get it right, but the whole probe methodology, all the work programs together, has 25,000 procedures. Okay. So if you want to go and, I don't know, see what's available, okay, I can tell you about some fun things to do on a weekend, but if you want to, or you are concerned, you don't have time now, you've really tried to go look for those procedures, but you can't find them. Then you can select hidden procedures, and all the procedures that could be switched on in this work program, so PPE in this case, will show as blue ones. And you can then, and I'm just quickly going to scroll through here. Can you see how many there are? It's not all 25,000. Okay, there we go. So there are all the hidden procedures. And you can then hopefully go and identify that one that you were looking for. Right click. Insert procedure. Remember, it's not ignored. It wasn't in the thing in the first place because we missed a tick somewhere earlier on. Okay, so you're in emergency mode. You have to have this procedure in the work program. You can insert it through here. Okay, it's not best practice. Best practice is to figure out where did I go wrong, because then you're never going to miss it again. Okay, but you can see it like that. So let's go to default view. We won't see all those hidden ones, and we just do what needed. Moral of the story is, obviously, you want to do it as best you can, work through the work program, but you cannot just blindly follow the procedures that appear in this work program. You have to consider if there's anything else you need to do to test for your specific risk, and you have to consider if there's anything in this thing that's not applicable, not relevant, not related to your risk. Hide them, ignore them. Right, so that's the work procedures for our account balance being property, plant, and equipment, and specifically for accuracy and valuation and allocation for depreciation at year end. Just the estimate procedures appear there because I switched them on, and a few of those ones. Then in my conclusion for the account balance. Hi, I have a number of questions. You'll be familiar with them. Have you identified any no-CLAR, any possible reported irregularities, blah, 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 blah. You'll complete all of those, and then you'll do your risk assessment at the end. So you'll see, I don't do not risk assessment, conclusion. I don't have any conclusion considerations even for the other assertions. There was no risk. So I'll only conclude on AVA. It will clearly show to me that I didn't do control tests. Same thing here as always. I'll indicate how much assurance have I obtained from performing the procedures for AVA. And I will then go and see, well, what is the estimated audit risk remaining? Is that good enough for me? In this case, it says medium 1. Is that good enough? I haven't done everything. And then the same way as always, you can then override it if you believe you've done everything that's necessary to reach your very low. Okay. And then sign off. Let me just, I can't move on while this thing says medium 1. I've concluded it is very low, and I will sign off satisfactory evidence. This is now dealing with account balance. Okay. But there's still stuff here. That's my traps. Transactions directly related to the account balance. So I did have a procedure. Let me just quickly show you that procedure. I did have a procedure under the required procedures about testing or auditing depreciation. It says here, select material assets. This is under my account balance, PPE. Select material assets from the cost of the items in the general ledger or asset register and perform the depreciation procedures under the TRAVs. Okay? So it says select the material cost items. You're going to go test depreciation for that. If I had recorded a risk for depreciation under operating expenses or cost of sales, I would have had what one of our colleagues calls reference procedures there, like this one, to say, select material depreciation entries and go and perform the procedures under 30510. So any and every depreciation testing will be referred to 30510 to the TRAB section. Sorry, there we go, audit procedures, and then say, for the depreciation entry selected, now you go and do these ones to test the accuracy, valuation, allocation. Okay. So what's important is when I'm concluding earlier on, I'm only concluding on the account balance. I did my risk assessment for the section of property, plant and equipment, the balance sheet line item, and I perform the procedures in this work program and I conclude on the balance in this work program. I do perform the procedures in this section because it's related to PPE, but the risk assessment for the depreciation expense and the conclusion for the depreciation expense is under the relevant section where it lands in the income statement. So operating expenses, cost of sales. Okay. So I'll complete the procedures and you can see there's no conclusion here. There's nothing. I'll go back to operating expenses and to cost of sales. Good. Let's have a look at the work program for investment property on the cost model. Here we had no risks, but we had a selected assertion. So again, no on NRSs for all the other ones. I have a medium to ROM, okay, because it's not increased more than just the fact that it's a material balance and just the fact that it is, that we've got that fraud risk from overall level that's affecting it. No other things. So it's just medium to, no inherent risk, but it is at selected assertion. Okay. Very clear to all of us to now see that. The procedures that are appearing are PD only. Okay, I saw the AVA now. Obviously, if they are affecting more than one, but the PD ones is the selected assertion. All of them will appear. Again, consider, are these the appropriate procedures or some of them maybe not relevant? PD tends to be quite relevant. Do you maybe want to add extra procedures? Do that until you can then conclude on the balance for investment property on the cost model. Okay. Go through that. Then you conclude only on PD because nothing else had a risk and you will sign off. You do have the TRABs reflected here at the bottom, but again, all of that stuff was done under operating expenses. The procedures appear for the gains and losses because it's related, but other than just appearing, again, your conclusion will be under operating gains and losses. The bank, are you ready? Not a material balance, no risks, no selected assertions, risk summary, nothing. No required procedures, you have a conclusion. Right. So the conclusion says, during planning, it was identified that this section is not material and that it did not have any relevant assertion. That's why you do not have audit procedures. Okay. Now, have you, during your audit, identified any adjustments, because that can obviously happen, which now results in this balance being material? Because if it is material, we have to go and do at least some work on it, right? Select an assertion at the very least. Or have you, during your audit, identified inherent risks that now makes an assertion a relevant assertion? Yes. And then you will be prompted. So if you identify risks that you didn't identify before, please, this is like after you've done 1220, you draw a line in the sand. Okay? 1220, we've done our audit plan and strategy. Up to that point, you can go back and fix your 1160, go record your risk, do those things. But after you've started doing your field work, you do not go and change your risks later on when you come across a new risk or when you've done that adjustment and now suddenly bank overdraft is material. You come to your conclusion and you come and update it here. Okay. So in your conclusion part, you've now identified a risk. Well, now amend your audit plan by revising the audit plan here at the bottom. I'm going to show you just now. For the new risk, for the new assertion, recording the new risk. At the same time, because this is now a balance with a risk, a SCOTB with a relevant assertion, go and document your system description. So yes, you will still have to go to 1150 to document the system description because it's got that nice prompting for you. You don't go to 1160. And then assess the inherent risk for the identified risks in terms of likelihood and magnitude. Okay. So how do I amend or revise my audit plan? Oh, let me first say, are any of these assessed risks significant risks? If yes, then, well, what do I do for a significant risk? I need to go and identify controls, again in 1150, and I need to have a specific response to significant risks. Those two things haven't changed. We just prompted for them here. Then I need to revise my audit plan because I now need to do work for this new risk that I've identified. Okay, so general wise, let me just give it a second, right? If I say general, that's where I now need to go and switch on required procedures, okay? I don't have to revise my materiality assessment, okay? So that's just one of the other things you could do there, but I don't have to. And then I have to, the most important thing is I now need to tell the software what must be in the work program. Which assertion is the risk? I also want to say risky assertion. So I'm going to identify, let's say, for example, completeness, okay, or whatever the one is that you want to go and select. Then the procedures are added to the work program. Only the completeness procedures are added to the work program. Okay, I'll then document there what is the risk. Hang on. What is the risk that I've seen? And now, currently it says NRS, eh? We can't have NRS. We have a risk. So I need to now go and identify, revise the risk assessment. And now I've got those buttons. Some of you may have seen that already. It's in the current product as well. To increase the risk to something more appropriate. And that will then have my ROM as medium 2, and I'll go and do the work. Okay. Yeah, so in this revised risk assessment, you also have to document the likelihood and the magnitude. Eh? You can't just get to a ROM without documenting what that assessment is. This is now your conclusion part, so I'll then go back to my required procedures for the account balance. These are my procedures. Complete, check all the relevant ones related to the risk, etc. And now I'll have the conclusion that say, did the results of our procedures, that's the same conclusion as before, and work through those until you can ultimately then assess whether you've got sufficient appropriate audit evidence to address this risk that you've identified. Okay, so the point is, if you have not identified a risk before, something happens on the audit and you now identify the risk, all is not lost. You can still fix it. But now the story is appropriately told in your file. To the trainees, I used to always say when I trained them in planning, I always said to them, do it this way because then the partner can see why the budget's overrun. Otherwise, the partner just sees the planning perfect. Well, what's your problem? Why did you know, what happened? Okay. But this is the way the standard wants us to show how it happened. Okay. The last one I want to show you is then on the operating gains and losses. That's a class of transaction. We had a material balance. We had one risk for AVA. And if we then get to the class of transactions again, the procedures for AVA is activated. Check that you have the right procedures. Again, we were talking about gains and losses. So we don't need something about, there was something else here last time about something completely different. I think I might have actually hidden it. That was just completely not relevant. So only show them the procedures that are relevant. Again, if you really want to check for any hidden procedures, you want something more, go check the hidden procedures, insert the ones that you want if you feel there's something missing. And then, as with all the other work programs, you'll do your normal conclusion. You'll only have the conclusion for the relevant assertion in this case. That's that. Okay. Good. I don't know if we've been prompting you sufficiently to be aware of what's coming, but that's how the work programs change. Good. Finalization, easy peasy. The only change is that the sections have been updated in your partner sign-off evaluation. Sorry, evaluation of the statements, because now we don't just have the 29 sections, we've got 70 odd sections. So when the partner wants to look at it in his partner sign-off, he wants to look at it in terms of his new sections. All right. Good. Thank you. Over to Christian.
Awesome. Thanks, Shanae. While we are saying thank you, I'm sure you can imagine this is not a one-person job. This was not done by just the content team. This wasn't just done by you and I, although we are the faces showing you what has changed. So if you want to throw someone, there's other people to throw as well. Okay. So, first of all, Christine Rousseau, she's joining from Cape Town. So, she's our independent consultant, on audit, and she's also the content manager. So she did most of the reading, and it's quite scary to now meet with her because she'll quote these ISO 315 references, the appendix this, the appendix that. She's on top of the game, and she was implementing all of the changes. We read through all of those procedures, and she read through them a few times. I can promise you that. So, 25,000 procedures is not an easy feat to go through 3, 4, 5 times and testing it all over again. So I'm sure you can imagine that happen. And then also in the room, I saw some of them sneaking out, is the A team. The A team at Caseware Africa is the assurance team, and they have done the development. And I see the quality assurance people still sitting in the room, so I think the release feels on track. I think we should be confident with the date. So it was a lot of things that they need to do. I'm sure you can understand it was a big feat that they had to achieve with making all of the changes, the biggest changes that we've ever made. So thank you to the A team and a well done and applause for them as well. Okay, so I'm not going to take too much time to summarize, but I think I just wanted to show you the slide again for when we started this morning. If you imagine this is where we're going to end up. And this is the momentous 10. So, we talked about those sections. We talked about the scalability, small and large. You now see some of the, core and extended items. The look and feel, you can see it looks different. Quickly go and identify the areas that's now different. 1051, procedure 1, risk assessment, all in there. The understanding of the IT environment, very important document. Controls, you saw the effect of the controls, how controls are playing out. Risk of material misstatement, you saw now what happens with risk of material misstatement. The assertions, hope the grouping makes sense. Go to the firm settings if you want to get the definition of how we've grouped them. And then the work program procedures. Everyone taking a breath, now understanding what happens, what is a relevant assertion, what is a selected assertion, what is no assertion, and then no procedures and just the conclusion. And then also those traps. Okay. So looking at the timeline. So we have the assurance roadshows, which we were busy with now, and we toured the country, you and I, to present it to the different firms. And thank you again for those people attending. We're having the virtual roadshow today, so we won't have a What's New session. This is the What's New session. But for the financials on the 23rd of November, there is a What's New session. So if you haven't yet registered for the financial session, that is where you will find out what is new in the financials. And believe you me, they've also been busy. There is a cash flow worksheet, which is next level. So make sure you attend that session and see what has changed for the financials as well on the 23rd of November. And that's also the date that we will release the template to you to get you up and running and started for the next year. And then we are, as Jody said this morning, working on assurance training as well. So looking at how can we help you into next year, we're looking at launching a product around assurance training or training module in March next year. So keep an eye out for that. Follow us on LinkedIn. We'll definitely send out an email as well when that is available. Okay. So any questions before we move on to SQM around Probe? Any webinar questions? You can just first the room. Any questions in the room? Happy webinar?
So thanks, Linka. So do we have to document why we have a remaining risk and that we are happy with the remaining risk? So remember when we have that desired audit risk, we said it right at the start. We said we want to audit until we get to the desired audit risk. So basically you have to always get to the desired audit risk. If there is a remaining risk that's higher than your desired audit risk, and you apply not just the double click on Caseware and say, oh my head, now there's something. If you apply your judgment and you are convinced that you have not yet reached your desired audit risk, so you've not sufficiently reduced your audit risk, you have to go and do more work. However, remember that thing is really just a formula in Caseware. So it cannot apply the professional judgment that you and I can apply. So if you've looked at it, let's say, for example, there was a risk that you wanted to record for the investment property at cost, and you said there is a risk, you want to double check the rights and obligations or whatever it is, and you went to go and check the title deed. There's only one thing you can do. You check the title deed. If you've checked it, you've checked it. You can't check 5 times. You can't, list 5 extra procedures. That's what you've done. So you've got to then ask yourself, have you sufficiently addressed the risk through 1, 5, 10, the procedures that you've performed? If the answer is yes, then you can override that because you've done enough work. So you may want to then document and say, well, there is nothing more to do, or the procedure was strong enough, something like that, to document why you are overriding it. But I wouldn't say that it's necessarily necessary if it is perhaps clear from the rest of the risk assessment, from the procedures that you selected, from the reason for the risk that you had initially.
Sorry, you and I went, before you move on, Inka. Want to say, remember in the firm settings, there's also a selection. If it makes you feel uncomfortable that you can't see when the desired audit risk was overridden, there's a feature in the firm settings that you can go and select to show you whether the desired risk was overwritten. So by default, we don't go out with it because we think, as you and I said, it's a formula. You need to override it when it's relevant. But if you, as a partner or as a reviewer, feel uncomfortable with people overriding it, you then want to go and see when it's been overridden, there's the ability to switch that on in your firm template in the firm settings to then always show if someone has overwritten it, and then you can review it and document the reason for that. So just as a note, if you want to take note of that one as well.
So that's the reality, that the clients don't always get things done. I do believe that ideally you want a trial balance that's maybe got 1 or 2 things outstanding. The client's still completing the tax calculation. But sure, that they really should have done all the invoicing for the year or anything like that. There's a number of things that are crucial things before you can actually start auditing. So if you are expecting the tax journal to still come through, you can work around that and do your assessment based on what you know about the client. Or maybe they do a monthly update of the tax calculation and you can already do your risk assessment based on that. But there really is a lot of risk for the auditor to start auditing when you have, almost want to call it, a half a trial balance. And I would really advise against doing that in the first place at all. If the client is putting you under immense pressure, despite them not having that ready, then I do believe that there may be, I don't want to say a limitation of scope on you, but I almost want to say unfair pressure on the auditor, and I would be very cautious of actually engaging in that.
Thank you. And then also just remember that when you import your balances, they do come in as planning balances, or when we do opening balances, they are planning balances. So the probe planning section only makes use of the planning balances. We don't take adjusting entries into account when we calculate your planning balances or materiality. So something that trips people up sometimes is they go and pass those adjusting entries then as part of adjusting entry, but that's an auditor's entry. That's our entry. That's not the client's adjusting entries, that's ours. So if you then want to make adjustments to that opening trial balance, you need to go and do it in the other entries, or to keep track of it, pause it as the other entries and then as the adjusting entries, and then you actually know what changed between your planning balance or the first TB and the last TB, and then you can keep track of that as well and do a report on all of the adjusting entries that you've done. Okay, so all the questions then online. Perfect. So let's move on in the agenda and look at ISQM1 as well as our solution to the ISQM1 standard, which is SQM. So who's already got their new, I won't call it a manual, but their new system in place? We all need to have a system of quality management in place by the 15th of December this year. So if you don't yet have something in place, you should have been listening the whole morning. And did you just look at me? Yeah, I think there's going to be a few eyes in a few of those. Okay, so let's think about SQM and what is required. So SQM is a brand new product that we've released in June, July. And we have released that to comply with the new requirements of the ISQM1 standard. So we used to have an ISQC1 manual. We've dusted off those manuals, throw them away. Now we have the new SQM, which is a cloud-only application, and it integrates then with the Caseware ecosystem. So when we actually read through the standard, we really saw that technology is going to have to form part of the new system. You actually can't get away with not using technology. It's talking about an iterative system. There's automations in there. You need to automate some of those policies, the procedures, the task. How do you track it? How do you manage it in the firm? So we went through those quality standards and we actually looked at how can we empower you guys as the firms to not spend too much time on quality, but still make sure that you comply with the requirements. And I'm saying not spend too much time on quality, but we want quality, but not the admin around the quality. So we looked at the traditional manual, and that was great because that had our policies, it had our procedures, it had our documents in there, the templates, but that really didn't facilitate the all automated approach. So we reimagined what we do with SQM, and JD mentioned it this morning. We've developed the app all the way here from South Africa. It is an international application, so if you're part of a network, different firms can use it as part of the network as well internationally. We're in about 30 countries with 13 different languages. I do have to say, as a product manager, when I need to look at my product in Greek, it is quite Greek to me because I've got no idea what's going on there, but we can still follow the process. So that is quite a unique scenario we are in. Then our vision basically for SQM is to not provide you with multiple areas of quality, but to provide you with a single management solution. So not just quality, but also all the other areas that empowers that workflow, and also to facilitate multiple facets in the whole system of quality management. We also think that the Caseware ecosystem allows us to incorporate all the information we have into the quality workflow. So in version 1, we have not integrated it into any of the engagement working paper files or any of the other ecosystems. But going forward and moving forward, we are definitely looking at integrating it into all of the other products that we have, and how can we bring information we have in our engagement files into the quality workflow and then automate areas around that. So our content team, you already heard what our content process is, except now the content process is times 13 because we do it in 13 countries. And we also do it in the different languages. But we brought together all of the qualified people in quality, different consultants, different areas of expertise, different firms, and looked at how can we design a quality workflow. We also included libraries. So we don't want you to go and start from scratch and think about every single scenario going on. The standard has your mandatory objectives, those you need to do. It doesn't have risks. It doesn't have policies. It doesn't have procedures, tasks, monitoring activities. Our content team came up with all of those, and they gave you a library where you can go and say, these ones are applicable, and I'll show you how that looks like. We also have a built-in risk assessment where you can then go and record risks for yourself, and then based on those risks respond. And then, as I mentioned, the content is approved by a group of experts. So before I move into the product, you and I will tell us a bit more around the quality workflow and some important dates.
Thanks, Christian. I think the fact that all of us are here today and listening to the audit side or the 315 changes means that the standard is applicable to every single one of us. But it's also applicable to firms that do any combination of the items that are on the slide currently. So obviously audits, independent reviews, it also includes other assurance. So let's say, for example, attorney's trust accounts, estate agent audits, and then also your related services, compilation engagements, and agreed upon procedures. So if you have a friend or a colleague or someone that only performs compilation engagements, that person also needs to comply with ISQM 1 from the 15th of December this year, okay, 2022. All right, so that's just quickly in terms of that. Now the question is, what must happen by the 15th of December? So every firm must establish its system of quality management by the 15th of December. And what's meant by that is you have to establish quality objectives. Now just a side note or a footnote on that, the standard has, I think, about 17, I really have to go count, I think it's about 17 objectives that they prescribe. Now, in some cases, some of them are not going to be applicable. If I literally am a sole proprietor, I have no staff, I do everything by myself, then the objectives around HR and the objectives around review and supervision of my teams, it's not applicable to me. but I really need to make sure that it really isn't applicable to me before I can ignore it. But other than that, I need to go and apply my mind and see if I've got all the objectives that will help me to achieve quality, both within the firm, compliance with standards and legislation, and have appropriate audit, well, not audit reports, but all my engagement reports signed off at the end of the day. So objectives, you can add extra ones. From our perspective, at the SQM team, up to now, we've been comfortable that we can always add in the risks and any policies and procedures into those standard objectives. So we haven't actually added library objectives at this point in time. Then the firm has to identify quality risks or identify risks of where these objectives may not be achieved, and then assess the risk that they may actually be going wrong. And where there are then quality risks, to design and implement responses, which is the policies and procedures that we currently have in our quality control manuals, and then also design and implement monitoring activities to ask ourselves, if I have this policy, how will I check that the policy is complied with? If I have this procedure, how will I know that the staff has complied with this procedure? That has to be done by the 15th of December. Right, so I think especially the monitoring activities one can catch a few people by surprise. And then from the 15th of December, this whole system must be operational. So everybody must have been trained on it. Everybody must have access to the system. Everybody must be complying with the policies and procedures. That doesn't mean you need to have new policies and procedures. Some of the old ones may still be applicable, but they need to be operated within the new system. And then within a year from the 15th of December, so next year, December, somewhere between now and then, you have to do an evaluation of your system. Now, that's a whole other ball game where we're literally going to go and say, having performed some monitoring and things, what do we believe? Do we believe our system is operating effectively? And if it sounds like your consideration of the client's system of internal control, that's exactly what it is. Is your client's system of internal control operating effectively? You're going to do that test on your own system of quality management. All right. Just to stipulate the objective of the standard, because that's really what you're asking yourself as part of the evaluation. Have I complied? Have I achieved the objective? Well, it says the firm is expected to design, implement, and operate a system of quality management for engagements that are performed by the firm, providing reasonable assurance. So you're signing a mini audit opinion that the firm and its staff will fulfill the responsibilities in terms of the standards, auditing, quality, etc., and the relevant requirements, bringing in the code of conduct as well, and that your engagement reports are appropriate when they are signed. Okay, so that's quite a mean feat to achieve. In terms of responsibilities, the standard stipulates, I actually want to say a minimum of 2 roles. The one is saying, realistically, there's going to have to be a person that has the ultimate responsibility for complying with that objective. So traditionally, that would probably be your CEO or maybe your managing partner. If it is a board of partners, well, then that can be the board of partners. That's the person or persons, the team, with ultimate responsibility for achieving the objective that we just had a look at. Okay? It could also be the person that is going to be operationally responsible, but in bigger firms, I almost want to say the moment you probably have 2 partners, you're probably going to split some of that responsibility. But the person with ultimate responsibility is also the person that will ultimately evaluate and conclude or sign the mini audit opinion on the compliance of the firm in terms of ISQN 1. And then the other role or responsibility that the standard provides for is someone to be operationally responsible. Remember, it is possible that one person can fulfill both roles, but it is also quite possible and probably more realistic that one person has the ultimate responsibility and another will be the one operationally responsible. What does operational mean? Well, you're going to be the person that's going to design the system, that is going to implement the system, okay? Whether you do it in Excel or whether you do it in SQM or whatever you decide is going to be best or how you're going to do it. You're going to also be the one that's going to not necessarily identify every single risk and assess every single risk, but make sure that they are all done. So again, depending on the size and the nature of your firm, there may be more or less people involved in that process. And then the standard says, well, even just operational responsibility is quite extensive. So it's possible that you might give an element of the operational responsibility to other individuals. Let's say your firm gets someone in from an external person to come and do your monitoring reviews, for example. That person will be the person with operational responsibility for the monitoring. Or you might have an ethics partner. That person can then be the person with operational responsibility for compliance with the ethical requirements. So you can have more than one of those, but ultimately, or at the end of the day, you need at least a person allocated for operational responsibility and for ultimate responsibility. Right. Then who should have access to my system of quality management? Everyone. Every single person in your firm has to have access to your system of quality management, because they need to know what the firm's policies and procedures are. They need to know what those quality risks are. They need to be able to respond to them. If you use an integrated system where some of those procedures are actually done within the system, they need to be able to do it on the system. You can't just have the audit manager do the stuff on behalf of everyone. And then I'm saying also there on the slide, and more, because if I've got that external consultant coming to do my monitoring, that person is forming part of my system of quality management. He or she needs to be able to do stuff on the system. So that person also needs access. So gone are the days of having a either PDF or hard copy file sitting somewhere in a partner's office and nobody ever looks at it. Or yes, you know, when you join the firm, you get as part of your little welcome pack, you get, if you want to look at the quality system or quality manual, go and look, you can find it here on the system, and then the folders change and nobody knows where it is. That's no longer an option. It needs to be alive and well and operational and living, and everybody needs to access it regularly. Yeah, I've got a colleague who says every morning when he wakes up, he wants to open it up and see the dashboard is green. And tonight before he goes to bed, he wants to switch it on again, open, log in, check his dashboard is green, and then he'll go to sleep at peace. Same thing tomorrow morning. Good. Christian, that's me.
Thanks, Jana. Okay, so let's look at how we can actually go and implement this system of quality management. So I'm currently logged into Caseware Cloud, and I'm going to go and select SQM. Now, hot off the press, we just released additional modules as well. So if you already purchased SQM, you would now see monitor and evaluate modules as well. We're not going to cover those today. The final release is going to be on the 7th of December, but we are going to look at design, operate, and operate overview. So within design, that is now where we're starting to design the system of quality management. So starting to document our policies, our procedures, and the objectives. But before we do that, you and I spoke about those responsible parties. So who is responsible in my firm? I can say I am going to be responsible ultimately for the system of quality management. And for me to actually go and accept this, I need to accept the responsibilities. So I'm going to go ahead and then accept and sign off on those responsibilities. Then I'll go into setup. So in setup, that is where I approve the applicable standards. So for the applicable standards, you would then be able to see the ones available to you. So if your firm is training in multiple countries, multiple regulations, you can go and select the ones relevant. I'm going to stick with ISQM South Africa so that at least I can read and understand what's going on. And then we do a risk assessment. So the risk assessment is, this is our risk matrix that we as a firm are going to apply. So based on the effect of something happening and the probability of that thing happening, what is the risk? And based on that, the standard talks about quality risks, and quality risk requires certain responses. So if there's a very low, there's no response. Sometimes we need to apply judgment. Sometimes there's a moderate risk, and sometimes there's a significant risk based on the 5 different risk ratings that could be given. Then we move into understanding. So after we decided how to set up the system of quality management, we now go into understanding. So this is our 1050, but our 1050 for ourselves. So we understand our clients, but now we need to understand ourselves. So what is our legal structure? Do staff work remotely? Do they, the number of associate partners or directors? Number of professional, non-professional staff, total number of staff, your clients, part of a network, what type of entities do you audit? And getting an understanding then of ourselves so that as we go along, we will then also identify risk. And there is where you would then go ahead and raise those risks for yourself. But let me, before I go and record any risks, just talk through the objectives. So these are the mandatory objectives. You can see we've already recorded them for you. These are your mandatory objectives, and you can expand any mandatory objectives, go through that objective in detail, and then sign off the objective once you have then gone through the process of completing it. So I'm going to just scroll down to the objective around relevant ethical requirements. So the scenario we're going to go through is I want to go and look at the gift register. And what is our policy around the gift register? So for me to continue with this, you can see some of the fields are not available for me to change. Those are from the standard. Firms fulfills ethical requirements. It's mandatory. There's the relevant ethical requirement, and I can choose. You and I said if you're not part of a or network, you're smaller firm, you can say, no, it's not relevant to me, and then document the reason for it not being relevant. If you say it is, then what is the objective? Any additional descriptions, link it to the standards, your authoritative references. So if you want to go and read up, where did we get that? Link to any external documents, whether it's on Caseware Cloud or somewhere on your SharePoint. And then you can see there's linked risks. So if I then went and recorded some of those risks will be available for me to then link. And it is a many-to-many link relationship. So you can link many risks to many objectives to one risk. Any notes, and then effective to and from. So I want to caution you of this specific item. Some firms think you can use a spreadsheet, or you can use the old manual to then go and document your policies and procedures. But just think about this. These policies and procedures need to be iterative. Some things change. Your value. Think about the gift register. Now we say 500 Rand is a good amount for us. With inflation, we might say by June next year, it's 1,000 Rand is a good amount for us to declare gifts on. How do you keep track of that? The policy is changing, and you need to keep track of that policy changing. Everyone in the firm needs to know when the policy is changing. But also in a year's time, you and I mentioned after 1 year, that needs to get monitored and evaluated. So now, if you come back to monitor and evaluate it, how will you do that? And just think about how will you implement that system of quality management in a Word or a spreadsheet solution. So what we have done to eliminate that is we give you the effective to and the effective from fields. So you can say if you don't put anything in, it's effective immediately once you published it, and it will be effective until you publish something new. If you put in a to and a from date, it will publish both the to and the from dates, and the moment it then switches, you will then see the new policy, procedure, or task, whatever we're talking about. And then I can mark off or tick it off and say, I'm happy with this policy or the objective, and I will exit the screen. So now we have our objective around ethics. Then I'm going to go into the actual risk. You'll see that there's only one risk currently, and I've only recorded the actual one. If I wanted to go and add more risks from the library, I can click on the Add Risk button, and there is the library of risks already for me to start with. What we've also done is we've linked it to some of the policy responses. So if you're coming from it from the policy side, you will see a filtered list. So only the ones that's relevant to you. Or I can also go and search for, if I'm searching for inducements, there is my risk for inducements. I can select it and then bring in the risk. I'm not going to add another one now. Let's go and edit the one we have already. So there I can see I've already linked it to my objectives. And I've linked it to 2 different objectives. What's the title, the ID, what is the actual risk, and then what is the applicable standards together with the risk assessment. So the probability and the effect. Once we have done that, we automatically calculate your risk assessment result and then the reason for risk rating. So you will notice 2 things in the product. There is blue asterisks and there's red asterisks. The red asterisks is the required field. You actually can't save this policy, risk, objective, whatever you're working with, without completing the red fields. The blue fields means you can't go and sign off on that field if you haven't concluded on that specific or completed that specific field. The reason we've done it is These are not compulsory according to the standard, but it is good to have it documented. So the reason, why did we record the risk? And there I want to caution you as well. You need to think not just about the high risk, but you also need to think about the low risk. Why is something a low risk? Why did you not make it high? Think about it in the future, when the system gets monitored and evaluated, someone else might come from a different perspective and say, but you've raised this load shedding risk for yourself as a low risk. Why did you raise it as a low risk? What is the quality objective? Why is it low? Go and document that as well. You don't, however, have to record every single low risk, but just if it's recorded, go think about it and at least show that is the reason for the rating. Then we link it to the policy, and again, we have our effective dates. So I'm going to sign that one then off, and then move into my policy responses. So here we have a few mandatory responses that we need to do, but I also have my firm response around the inducements or gifts. So there we say, that's my policy response. The firm applies a conceptual framework to identify and address potential threats when inducements are offered or received to or by clients. Okay, so that is my actual policy. And then we go and we link that policy to a procedure. You can see some of these I can't sign off, and that's because I'm not meeting the minimum requirements of that item actually being documented. But for my procedure 190, I can already go and sign off because I have completed the actual procedure response. So let's work through a procedure response. So we have an objective, we go into a risk, we then have a policy, and then how are we responding, or what procedure do we have in place? So there we say, when an inducement is offered by or to a client or another person, the instance is recorded in the firm's gift register and other inducements. This is achieved through completing the gift and other inducements tasks in the SOQM or the SQM app. Now, what we can do is, when we receive or a task, something can be automated and something can be manual. So think about a gift register, the timing around that. So is it manual or is it scheduled? I mean, you can't schedule your client to give gifts to you, except maybe Christmas. But otherwise, you'll just get a gift when you get a gift from a client, or you will send one when you send one out. So we can't schedule your gift register to do something for you. You will go and record the gift when you receive the gift. So it is a manual task. But we could have also said what policy could be scheduled, something like an annual declaration. So for the annual declaration, we can go, the frequency is, we can go daily, weekly, monthly, yearly. And we can also then say when in the year does it need to happen, on the 1st of January, on the first week of January. And we can then schedule if we think independence declaration, at that point to say it actually needs to go on the first day of the month in January, and that will then prompt all the staff to go and complete the independence declaration. So that's where we're saying we still need quality, but we don't want the admin around the quality. All staff will receive a task. They need to go and complete the independence declaration, and we can track that. But for now, I'm not going to schedule it. I'm going to go manual. It's our gift register. It is applicable to all firm personnel, so it doesn't matter who receives it. They need to document it, everyone. And I can also assign it to someone specific. If I said only your name, Christian, so if you think about then, maybe another policy is the gift register is reviewed on a weekly basis. Now, that's something we can schedule, and that's something we can then also allocate to someone to say they will get a task every Friday, and they need to go and review the gift register. We assign it to all the groups. We again have our effective dates, and I can sign off that item being prepared. And then we have our tasks. So the task is now what actually needs to happen. So you have a procedure, but as part of that procedure, something actually needs to happen and something needs to be executed. So in the task, we have what we call a form editor. So this form editor, you need to think about it as something of a MailChimp or a SurveyMonkey, Google Forms. You can go and create any type of form within this task. So there we have already gone and documented your gift register fields, but you can go and you can drag and drop, you can add a new text field, document what the text field is, give it certain requirements, any validation you want to link on it, and you can then go through that process. Multiple fields, you can do text areas, numbers, checkboxes. So you can see you can really go and customize a nice task for the staff to then complete for the different scenarios. Again, we have a library of tasks. So we already went and completed some of those forms, and you can then go and link that task to the policy and procedure. Okay, so now I go into review and publish. So I've designed at least one objective. I've designed my objective. It's got a risk, it's got a policy, and it's got a task linked to it. You'll see that I do not have any errors or warnings. If I didn't complete all the fields or I didn't sign off all of the items, then I would have had a risk. And it would say, you actually can't go, you can't continue, you can't publish that specific system. I'm going to go ahead and approve. So I'm approving the draft system of quality management, and then I will go into publish. Are you sure? Yes, I am sure. So now I have at least my system published. My very first system of quality management is now published. It's one objective with everything linked to it. This is where the design ends. So those people ultimately and operationally responsible, that is where they will spend their time actually designing the system. Everyone else in the firm will then have access to the operate module. So that is where they will function. That's where they will work. So first of all, you start off with your system of quality management. So there's the system. I can read through it. This is now my old manual. I'm paging through my manual. There I'm going, okay, show me the risk, show me the policy, show me the procedure. This is giving me the system. Then if I needed to know who's responsible for what within the system, I can click on the responsibilities and I can see who in the firm is responsible for what and who has been published. So there we can see you and I there. And then within the tasks, this is now a task for me. So I've already generated a few manual tasks. If it was automated, the task will generate, you'll get an email, and you'll get a link to come and complete this task. But let's say I receive a gift. So I will go and add a new task. I will say gift, I think 3. It is the gifts or inducements, and I'll go and create a task for myself. So I just received a gift, and I'll create a task. It will open the task, and I can then go and complete it. The results from the tasks then automatically go into the gift register. And when that is then reviewed, you can go and look at what the tasks is and how it has been created. Okay. Seems like we have a bit of an internet issue here, but just going to go ahead and cancel. And then there my gift has been created. So let me open the task just again. So now what you'll see is the task should now be available and I can go and complete the actual task. Okay. So that is where you will then work. And every day, or well, not every day, but when you do need to, you get a task, you will come into the task, complete the information, and you will be prompted. So when a new declaration is received, or when you need to do something for the actual engagement files, your task will be documented here. Then we go into operate overview. So now we've completed the tasks, and the ultimate responsible people again want to see, okay, what tasks do we actually have available? And for now, I can see that none of the information is there. There's no fields yet available, but you can see the task. I can see the report. As people start completing the gift register, this is my actual gift register, and the information will then be completed in there. You can again filter, you can group, you can drag and drop these columns and make it work for you. Okay. So that is then how to implement a system of quality management. So you saw we have some built-in objective. We'll give you continuous updates. It's on the cloud. You don't have to worry about installing anything. A note though, if you should have received an email with the update yesterday. You need to go and switch on those evaluate and monitor modules for the staff where it is applicable. So it's not going to pop up automatically. you need to first go and allocate who in the firm is going to then design those monitoring activities, who's going to monitor, who's going to evaluate, and then assign it to them. Then we help with the quality management. All of the information is centralized. You get those real-time notifications when there's actually a task outstanding for you. You saw the risk assessment that we did, many-to-many relationship building. And then we also have the versioning. Every time you publish the system of quality management, we save a version. So if you need to go back, you can go back to that version. You can compare. If you need to evaluate that specific one in that point in time, you can then not revert back, but look at what was going on in that version, what has changed since, and then monitor that specific version. Any questions before I give you your weekend? I'm now standing in between everyone and their weekends. Okay. If there's no questions, you're welcome to reach out to your account manager. If you want to see a personalized demo and you want to see more information about SQM, remember, 15th of December, we need to have it implemented. So if you don't have something in place, get in touch with us so that we can help you to get that system implemented. Thank you very much, and I hope you have a great weekend.